Auto reactions. Auto reaction. Reaction automatic. Automatic reactions. Yes. Well, it's trying. I do not like that volume. Oh boy. Let's get some real volume in here, please. Please, thank you. Good morning. Good morning. Good morning. It's still morning. A little late, but it's normal for me on Tuesdays. Good morning. Some nice bits of green here today. You know, GME is a lot more interesting in my opinion right now than AMC because of the move right at close yesterday, and then even in after hours, kind of examining this area right here around 29.57. I gotta say that like these parallels that I set up do seem to be working out, and there's a lot of interaction here with the current kind of upward creek, if you will. So I've got two charts on the screen for GameStop, and they both use some of the same lines. There were some slightly different marks that I made on each chart based on certain things. Like when I did this chart, I didn't necessarily expect it to go higher, and I had a push up that goes up significantly higher, but it was like kind of like this off chance thing. And then when I went back and reevaluated, I kind of felt that, yeah, 40 seemed likely, and that is very similar to this region right here, this green little pocket. So there could be an extension up here to like the 40, roughly right over 40 area. When I reevaluated and did the chart again, that didn't even seem like super reasonable. It felt like we wouldn't need to go that high. But, you know, it's kind of a mixed bag because a lot of this will depend on timing, and if we can manage to cross this particular downtrend right here, which is a parallel from the top, then the only thing we have left, the next parallel, is up here on the red on the right side here, and it's about, again, as the crow flies, it's maybe about $38. Timing is important in this case because when you get there would matter. If you get there, right? It would matter because if it goes there instantly, you know, maybe it's a little higher. If it goes there later, it could be a little lower. That's the nature of like a downward creek or a downward trajectory there from the top. So how confident am I about those playing out? I'm pretty confident. You know, when you generate a creek that has like a really long sustained, this is like 6 months or something ridiculous, you know. This goes from June all the way down to October. Maybe not 6 months. You guys are like, that's not 6 months. June, July, August, September, October. It's like 4 months. Okay, still. 4 months, long term, you're developing like that trend. I think the implication for me anyways is that channel should then be respected. And it is. It is gently respected as the bottom trajectory, and then I've been using it as top points, right, to talk about where we might end up kind of hopping over and finding supports and whatnot. And it's pretty much exactly where you expect it to be right here. So when I look at the last one, I don't look at it with a lot of speculation in my head. Like, I'm pretty confident that is a wall, and I knew that was going to be a wall, and that would be met as we meet the top here. So when we were talking about the possibility of going up on GameStop, and we did talk about it a lot. I mean, people always like, what about GameStop? Well, we talk about it. We were just waiting because this had developed a pullback, which made sense. You know, it needed to come back down, check some things, and we were watching to see if GameStop was going to complete a head and shoulder or if it was going to kind of subvert that and just kind of unwind and then push back up, in which I called it a rotation. So going over to this right chart, this is a 10-minute chart. If you're looking at it, you might be wondering, what time frame are you on, Booksy? It looks kind of small. It's 10 minutes. So like you see it's overbought here. Well, it is, but this is a low time frame. It could warrant a pullback, sure, but it is a low time frame. So just keep that in mind. You know, from where I stand, that advancement is kind of like partial. Like, we made an advancement. We tried to, unfortunately, we didn't look like we were holding it, but we tried to jump over this main, I've called it like an ice level. It's really the cross section between these waves. So like, if you look at a wave, it always goes up and then back down, right? The cross being like the middle, where are the cat ears placed? Where is that support and then the subsequent resistance? And then how does that play into the future? Well, it's obvious, because if you can't come back above this mark later, you're not going to make any further advancement. This is exactly the same thing that we saw on AMC's setup, and AMC did not make the advancement. It's that simple. So like, we can go back and forth between the two if we want to just kind of examine them, just to see like, well, what are you talking about? Like, that's essentially the same mark that we have. I'm not going to do it perfectly. I'm just going to kind of quickly throw it up here, like here. Okay. So there's an advancement that was made on AMC, much the same as GME. In both of them, in both cases, had done their downward wave. They were coming back up, and you need to advance here in order to continue. The problem with AMC, of course, being that where it needed to advance was really high in the range. It's like almost the top of the range, because unlike GME, which was sliding down for a long time and had a lot of high peaks, AMC's peaks are all kind of clustered in the top here between like 560 and roughly like 590. So there's not really a lot of variation there. GME was different. It had a lot of variation coming down in these peaks. So we are back at a similar spot in terms of like location, like June, July, but we're not yet at that high peak. That gives me a little bit of hope that it could go there, right? And then when you look at the overall picture, those parallels, there's one that's kind of invisible. That's the after hours move, and that's that red line at the top. And I think genuinely like that could be the one that, again, if you push up, that seems the most likely place to go to. I would call it like a triangulation. I would call it a retest on, the top supply, from back here in June, early June, which again, AMC hasn't had that either. And in theory, I guess if you were feeling like particularly bullish about AMC, like in theory, if they both went up to retest their June 7th tops, then AMC could be back at 594 before no time. This is kind of like the ex machina move we talked about, because it's like, oh, it's just going to come out of nowhere and save the day. Well, it's not impossible. It's just not highly likely at this point. We'll see. We'll see. So when I look at this overall setup, it's not exactly like, oh, it's all set in stone, like it can't possibly go back up. It's more just about, okay, what has already happened? What seems most likely? And is it possible that this triangulation does play out and you get some kind of massive burst to the upside like we were originally thinking, while GME is also trying to burst to the upside and get back to $47 or something? My charts on GME haven't really been cleaned up at all. I haven't changed it very much, and that's mostly just because I don't chart it as often. It's also just been a simpler chart in some ways. It made its back up. It held underneath 24, and then it broke out. It was super straightforward. And then that was basically your buy zone. We had a target to the upside. It hit that first target, I had a second target to the upside. Did it ever hit that second target? Not yet, but that's the one that we're talking about here. And ultimately, big picture wise, on GME, it's important to note that that big picture target up here, roughly around the top, you could say $46, you could say $39. It doesn't make a huge difference because they're straddling, in my opinion, it doesn't make a huge difference because they're straddling this green line, which is ultimately like the big one, in my opinion. When you go through and you look at this carefully, you can see very clearly why that would be important. Like, if you're just kind of glossing over it, I would not gloss over it. Because on the macro, this is like a really big deal. This is where the breakdown happened. Like, this is the main creek cross around 24. It established that really important high liquidity shelf for GME. It took a long time. It was over a year that it spent in this area. It developed a support. It had a lot of signs of weakness. It broke that support, and then it developed resistances. There's like more than 3 hits on that. There's more than 3 hits on the other side. It's a very clear and evident, in my opinion, it's a very clear and evident cross, right? And that goes all the way back, and we've talked about this before, it goes all the way back to kind of the history of GME on like a macro level, like way big, you know, looking back over time at the trajectory here of this ultimate kind of spring and reaction, right, with this huge backup here. And we're seeing if we're going to continue on the big picture. We're not sure yet that we've come down far enough. I'm not sure yet that we've come down far enough. A lot of people are going to disagree about that, but there's a long-term kind of historic creek here that just hasn't been checked. And I don't think that it's out of the question that it gets checked. Now, is it possible that we're never going to go back below? Maybe, you know, but part of me is like, you don't really ever know until it's over. So the idea of coming back to $12, the idea of coming way down low may seem ridiculous to some, but like long term, if you looked at this and you didn't think this was like a huge big picture chart, you probably wouldn't suspect this is a problem. You know, like if I saw this and I saw a breakout here with like an SOS and then it backed up to like $4, I know it looked crazy, but like really that's not an issue, because if you can see it's like a 50 cross here, come back down, it's just a test of that top liquidity. Do I think that GME purists out there and those that want this thing to run are going to accept that? No. Do I think that people are going to just kind of dismiss it and say that's never going to happen? Yes. But I'm saying from a technical standpoint, I don't really care about those arguments, like the whole like that's never going to happen kind of thing. It's like, well, never say never, you know, like the idea of this taking off from like what is now 484, that was a previous shelf here. It passed through that range. If it can hold above here in the 12s and 13s, no, it won't ever go down. But mark my words, okay, mark them. If it does ever break through that $10 area again and start dropping, it's going to go probably pretty low. Like there's a strong chance that this could come pretty far down and retest some really huge trends. So what I'm talking about right now is like one of those trends, right? And that is the one that has anchored the current wave structure. So again, we had a wave up, wave back down, and then this is the reaction back to that wave. Just like on the smaller scale, but now looking at the weekly on GME, that's the exact same kind of thing we're talking about. Like when we're talking about this kind of stuff on AMC, or we're talking about it on, we just looked at it on AMC, like coming down through, right? Big reaction, come down through, go back up to test. All of that is legitimate, I think, good TA because it makes sense. There's a reason that you would go back there, you know, for liquidity purposes, for supply checks, or to break out. If you're going to break out, you got to come back up here. And I've contested this a few times, but I've said it when we looked back. There was a comparison we made to another chart that was a really good comparison. I can't remember the name of it right now, but whenever you SOS, you always come back to the top, and you always go back around this mark, this wave mark. You always end up crossing over the top of the wave. So those are things that when I look at it, I'm like, yeah, that makes perfect sense. And so if I look at this on a macro scale, is that what's happening right now on GME? Yes. Like, I would say 100% yes. Like, that seems to be exactly what's happening right now on GME. As in, it made that wave down. It set up kind of some institutional markers, really long-term ones that were pretty easy to see. Right back here when it was at 24 for like a year. And even on the RSI, you can see it. I mean, it's super straightforward right there. So this wave broke down, and now it's going back up to test those waveforms, right? To retest, I should say, those waves. So how do you advance, Booksy? If I'm a GME purist and I really want this to run up to the moon, what does that mean I have to get above? Look, man, I know that people out there, and I'm not poking fun at GME purists, so to speak, but there was somebody on here the other day that was saying that GME couldn't run without AMC, apparently without AMC shareholder approval, which is absurd. And it's clearly proved that person wrong today. So hopefully they come back and say, hey, I was wrong, but they won't do that. They're probably not going to come back. But this idea right here of where could it go, and how far could it go, there's a pretty massive wall that needs to be pushed. And that's this wall right here around $50. Do you remember when I don't remember who it was, some short company was like, oh, they won, blah, blah, blah. And that guy came out and said, oh, I think it was like, maybe his name was Andrew something. I don't know. Or I'm mistaking it for somebody else. But he was like, oh, it's you guys have won for now or something. We'll be back at 45 to 50. Well, I thought it was weird that he even like said that. But really, like, that's just the supply zone. Like, that's the area this had consolidated around pretty evidently and then broken down from. You can see very clearly it broke down from what is now 50 way back in December of 2021. That is indeed the triangulation to where this intersection is happening currently. There's really no reason to suspect that you could go to the moon, so to speak, unless you can build support over 50. And I know that seems like kind of a no-brainer. It's like, well, yeah, you have to go through a low number to get to a high number, Booksy. Like, no duh. I say those kinds of things sometimes, and I hear it in the back of my head, like, this sounds like really stupid because it sounds like I'm just saying you have to advance in order to advance. But what I'm really saying is, like, that's a wall, and there's a consideration to be made for that wall. And if you don't cross that wall, you ain't going to the moon, you know? So, like, there's a lot of people who, anytime it moves up, will be like, this is it, we're flying, we're going right now. And I'm like, this is not the level. Like, I would not be calling it out right now, personally. Is this a historical supply zone? Yes. Has it been used locally and in the past as a supply zone right around 30? Yes. You can see it historically has been used. This is what was used in November 2020, again, about a year late after the first, to really solidify the downward movement through this wave. I don't doubt this is an important level. And as a result, yeah, I do think there's a possibility as soon as this breaches here, it goes up and goes back to check this mark. That's why I'm very like bullish if it can get above 32 here. Like, I'm really bullish if it can get up above here. This is a cross locally of a wave, right? This wave line that we made. It's a resistance right now. It hasn't been broken yet. So 32 is a big zone for us. We need to break out. But then you can see, like, kind of clear, like, smooth sailing, if you will. I don't know, clear sailing, whatever the term is. Like, there's nothing really there until you hit this kind of top intersection, which I would describe as like 39 up to 43. Could it go beyond there and go up, extend up into the 50s? Yeah, maybe. Will we necessarily see it in regular trading hours? No. You know, there's really no reason to suspect that we would have to. As a target, I would say that this zone right here is the hot zone. Like, it's the one that's going to be the most contested. If bears want to stop and advance, they have a huge supply zone advantage right now. They have a huge supply zone advantage from 45 to 50. So if it extended to the upside, they've got 45 to 50. Most, unfortunately, maybe for retail, most of your institutions probably be looking at that as it's probably going to be a good place to sell. And it obviously, if you bought in way down low below 24, that's a big move. You know, you made a big profit. in addition to that, you've got the wave cross. If you don't want it to continue, you're going to knock it down as much as you can beneath like 40, 43. Like, so you could have a wick to the upside. We could gap up and run up really hard to 47, 48, and then on the weekly end up closing below 42. And that could be just an institutional signpost that like, yeah, we're just distributing and we're going to head back down, so on and so forth. So those are going to be the dangers if you do run here. When you get up to these high zones, there's a lot going on right there. Okay, a lot. And again, this is not like short-term kind of stuff, although there are some, right? We've talked about that. It's really macro, big picture. And yeah, if you make that jump, I've got a big marker up here. If you make that jump over 49 or whatever, I think it's totally feasible that you could come up all the way to that 85 to 90 area, because that's kind of the next big zone. That's where we were in after hours before they dumped it back down to like 60s. We were up at $80. It's totally feasible you could get up there. Just like it was totally feasible on AMC that it could get up to like 13s, because it's sort of like a phase B top. Do I think it's likely to happen if there's no intention of driving this up, like continuing? No, I think it's less likely. I think that because of where the sellers clearly jumped back in at 47, like they already dropped the supply down. So in order for us, again, to make a case that this has an advancement, you really have to see it build some kind of a power through 45 to 50. And I just don't see that likely right now. And I'm just being straightforward. From a TA perspective, I've already said it. I think this could be just a simple like cat ear before an attempt to drive the price down. And ultimately, like, the reaction doesn't need to go this high. In theory, if this is a reaccumulation, even if it's bullish, right? If it's a reaccumulation after a decline, which means you made a buying climax way up here at 65, and then you built out a range with the top auto reaction being at 47. There's no reason a phase B then needs to go to like 80, you know? Even coming up just slightly above that 48 or whatever may be enough, you know, for a phase B top. It doesn't even have to go that far, right? And again, in theory, if you're just trying to do that so then you can drive the price back down to like 16 or 15s or whatever, or even lower at like 12s and do like a dive, you don't need to go that far. It's not necessary. So part of me thinks that that wouldn't be very likely, again, unless it's just some kind of crazy squeeze moment that then rips back downward really fast. It just doesn't feel necessary unless you're going to advance. And so if I saw us going to like $90, I'd be like pretty excited, because I don't know like why you would do that unless you're going to try to maybe hold 50 and then advance. And you would expect some pretty big swings with the possible massive squeeze moment, you know. Some people noted there was a really huge buy-in for some calls. Look, if this pops and it goes to like the 50s, even if it like breaches above it, for a moment, they're going to be, you know, those calls are going to be rocketing. The 120s or whatever were bought, there was a lot of them. If it goes to 80s or 90s, they'll be rocketing, you know. That doesn't necessarily mean it's going to go beyond all-time highs, which is right up there like 120s. Could it? Possibly, you know. When I look at this big picture, it doesn't really seem like the story is written yet. Like, it doesn't quite feel like finished to me. I got a lot of garbledy-gook here, like a lot of noise, but in reality, what we've done is just made a big advancement, and we've started building out a range here. We've crossed a creek. We're trying to see if we're going to advance. It doesn't quite feel done. It's a lot of speculation on my part that it doesn't quite make it there. It gets rejected at 50s and then tries again low, mostly because I just don't think we had any real adequate check on this main trend here. Like, we kind of jumped over, much like we did with AMC. Do we have to do that, Booksy? Look, man, I have that argument every single day with myself. I've been back and forth about different things. We said the same thing about when it came up here. Does it have to come back down and check, you know, this breakdown here? Well, you tell me, you know, looking back on it, you know, what was wisdom at that point? Was it wise for me to sit there and say it's probably going to come back down and check it? Was it wise to say this isn't likely a breakaway? Was it wise to suggest that we're going to make some kind of revisit to 455 at some point? Yes, it was. And so when I look at these things big picture, I think it takes a lot longer, but there's not really much else to go off of when you're talking about chart analysis. Like, you kind of just have to take it for what it is. No, nothing has to happen in the market. No, any kind of a predictive idea could just be an idea. It could just be left on the shelf in the end and not used. But at the end of the day, you know, this backup was pretty good down to like 17s before it pushed up again. Do I think that there might be a desire to come back, potentially, you know, trade down again? Maybe. Again, I think it has more to do with like long-term stuff. Whether or not this long-term goal was achieved, I think is a big question mark. My big concern is that the dip that happened here with this massive reaction was indeed a dip off of this, well, from way back, these huge cat ears, right? You can see it pretty clearly. My big concern is that this could be some kind of a weakness, right? To see, like, if we want to go down there and trade. They found buyers, obviously, and took it up. But did they take it up because they found a lot of buyers, or did they take it up because shorts that have been in this for a really long time decided it's time to cover and then do it again? It's a question of motive. And we know that institutional movements are like that. They'll take it back up and redistribute to get strength to go through. In which case, there's no doubt in my mind, much like AMC going to like 226 or something, there really would be no doubt in my mind that this would attempt to come back, right? Retest some levels and go back low. Like, why would that be even a doubt, right? If this was done, if this held like right on the dot, I think I would have been more inclined to say no. Or if it had just barely made any kind of like wick through. But it did not. It traded for several weeks down below. And then it has this massive reaction. You know, we don't necessarily know. Again, it's a little bit speculative. But we had talked about this previously, and like, I don't want to go too deep into this because this is kind of way in the future kind of stuff. But, you know, it's like anything. Like, if that's a sign of weakness and the intention is just to see if we can kind of push down and how low we can push, that would be the direction that you'd essentially be heading. You know, it's not complex. It's a triangulation even of this final form. And you can see that, like, it basically just points right to, again, the lower intersection here, which is not, again, I feel like it's like people think it's like out of left field or something. It's like 480, and it's like, that's so low. It's never going to go to 480. I don't know, man. That's just the bottom of this move where it broke out. There's a huge amount of triangulation going into that point. I think that bears may not be successful. I think that like any trajectory we see to the upside and downside, they're not always met. That's a false thing to say, oh, it always goes. It doesn't always go. But when you look at this from that perspective, it's kind of obvious that that's what's in view here. So whether we like it or not, it's kind of it doesn't matter. It's completely irrelevant. So with that in mind, this idea of like June, even this is like really late. This is June 2026. But with that in mind, it's like, is it possible that this is just another effort to distribute in order to try to drive the price back down? Yeah, it's possible. That shorts are just loading up again. And why not? The last time we were this overbought, historically, we were way up here, you know. Yeah, but Booksy, it's really more like back here, right? Because this is like the first move. And once it goes through here, it's going to break to the top and go to like 200. Maybe. But, you know, I'd be willing to bet, and I'm not going to be any more like, try to be any more prophetic than this, but I think I'd be willing to bet that if that's the case, and it is indeed a little bit more like what happened back here, and you're just kind of regaining your footing, and you're going to cross up, and then, like we said, jump over 50, hold that, and then go again. I'd be willing to bet that during that extension, again, it's possible, there's some pretty nasty stuff that happens. And I think that a lot of people are very much of the mindset that this is the original squeeze play. Like it's going to keep going and keep moving and stuff. I would be cautiously optimistic though, because I think that there's a lot of people who were kind of, I don't want to say stuck, but there's a lot of people who bought in back here on GME who really don't want to ride this forever. And you also have now a lot of institutions in the play that weren't necessarily in the play before, which is dangerous. This is a high risk situation at this point. Now, people who are like really deep into GME are like, no, they're very much of the what's the word? Like pigeonholed, like tunnel vision. And I respect I respect the mission that a lot of those people have. Exposing corruption, getting this squeeze play is a big deal. Like I like a lot of that stuff. I really do find it to be very appealing and to be very worthy even of some sacrifice for some people. Like they really want to do that. But legitimately, from that perspective, if it does push up, I'd be pretty concerned that, I know it sounds weird, but I would be pretty concerned that it goes up here and then actually just comes down like really far, because this is steeper than this. And that's another thing that like really stands out to me here is if this does break out, right, in a similar fashion and move to the upside, much like what happened here, the iterative nature of it is concerning. This is really steep, and it's all pointing towards this direction right here, as opposed to this, which is real mild. So again, it's like when you look at the overall creek structure here and where does it point to, it's a similar region. It makes me really nervous that June 2026 is going to be something not good. So even if it were to go up right now and just kind of cruise to the top, I'm like really worried that you might hit something and then just kind of crash, which again seems a little crazy. But then again, if the play gets exhausted and people start selling, like who knows, you know? A lot of people would look at that and say, oh, it looks like a UTAD kind of thing, or whatever. I'm hopeful that doesn't happen. But it's hard to deny like shorts have a very strong interest, again, in this area. I think it's very clear to me that that's some kind of a goal. So short term, it's simple, right? We kind of went out in big picture just to kind of get a big picture view. Short term, it's pretty simple. It's no different than what we had talked about previously. I had made this mark over here to suggest that if it crossed early, that could happen. I took the same idea and just put it over here like a couple days ago or something, because we didn't really look at GME for a bit. I was like, well, it's just coming down, so we'll wait. It did come down and hit the level that it needed to hit, got close to that gap fill and dipped below, and then it came back up, broke out. You can see on decent volume here is a big cross of the main creek. That was the one that we talked about, saying like, hey, if it's going to go, it's going to jump over this. That was back here. And then try to find support maybe around 30. So we're in the same exact spot. It's just to the side. Like I could move this over and suggest that it's the same idea. So what happened is that this rejected down low, and now you would just shift it over and say now it needs to make, so it made the advancement over the top like expected over 31. Now it needs to make that support above this creek. So what we got was an extended downside. Now that the extended downside is done, interestingly too, I don't remember when I made this mark, but I guess I made it. This is interesting because it like intersected there. So there's a lot that still has to happen, I guess, is what I'm trying to say. Like we're not quite out of the woods yet. It's a good move, no doubt. It's a good move, but I would love to see support right here on this red line above 29.86. If we don't get that support, we would at least need to hold the creek, which is kind of low. It made a jump here without checking like anything. So I would suggest that it could come pretty far down. Like it basically have a throwback to near the beginning of this move. As long as it's above like maybe this 27 or 28.60 area, it'd be fine. But But either one would be good. I think like I said, 29.86 is better. So holding 29.86, which it already kind of wicked down to, that's nice. That would be a good place for us to find support. And then I think if we continue, we're probably playing into that rotation. Now I've got it timed out to where I think it was supposed to be in terms of the rotation, where this hits on like the 17th way up here. Is that possible that it hits there today, Booksy? Yeah. I mean, if it hits this, yeah. Yeah. If it hits this and jumps, then yeah, it's totally possible. This was a really succinct measure, so if it can manage to do that, it's going to probably rocket up to like 33.90s. And then I think it would have to come back and find support again on the next layer. I don't think the timing of rotation is always perfect, but it's usually pretty close. So I'm not going to like drastically change anything else from here. I'm just going to kind of leave that where it is, and then I'm going to just, that way it's not like shifted around. And so at this point, we want to see support. Everything else is not really that important today. Like if it holds support and it holds support well, then I'm pretty happy with it. Ultimately, within the next couple of days or whenever it reapproaches this 31.50 area, it needs to make a jump. And there's a lot of resistance here. So you can see there's a lot of junk that I've got. Kind of, it's the previous top, obviously, the 31.90 area, but there's that rising creek that we need to jump over. And if we don't get that, we're not going anywhere else. So could happen today, could be tomorrow. You know, who knows? Fed meeting, all that jazz. Breakdown would be a similar story. It would just be the opposite. So if you lose 29.86 and then you come down and you lose, I would say as low as like 28.34. There's an intersection here. It already pushed below that creek here. Like it already pushed below that rising support, that trend. And it found support on it. Coming back through it after making an up thrust that's higher would be potentially detrimental. In terms of like local waves, do I think that's likely? That's a good question. We should probably chart that. So the local wave would be this guy and like the reaction back up. This guy right here and the reaction back to the upside here. And we didn't quite make it to the top. If it's bullish, a lot of times you're going to kind of alley-oop, like you get into a little layup and get up on top. Some people would look at that and say, it's a cup and handle. I don't really think it's a cup and handle. I just think of it as a wave. There's a lot of that kind of stuff in the market. The M shape on the bottom shows you like kind of where that might be. But you would expect there to be another M right here, like a 1, 2, 3, 4 that crosses up and over the top at 31.80 before you get that continuation. So for us to see that a little bit more clearly, one thing you can do is you can use the information from the upward wave to help you determine again where that might be. We've already got some of those lines, like this blue and the orange line here are pretty good. I don't really think I should redo those. I believe the blue one is probably the strongest because in my opinion, it signifies like that main uptrend. The orange one is currently being used as it's a lower trend. It comes from the beginning back here, October 28th and November 4th. It's currently being used to reject. But I think that the higher trend ultimately, which we did push up to on December 5th, would be the one that we'd probably see a first top action. So usually like the last trend that you break, not the bigger kind of, we're talking about that orange. It's like that orange is only here. That's like the only 2 hit points until it kind of uses it as supply later on. It doesn't have anything else. So it's a pretty low key trend. It was just established in the beginning. It's only being used now to help prevent the run from supply standpoint. There's a selling that's happening right above it. Every time it hits it, it's selling off. But really, like, you would use the bull trend most of the time to help you define where that top might be. So again, different ways of looking at the same information. And I suppose what I did was I used this low from November 4th. Let me try something really fast. Hang on a second. I don't want to like butcher my, well, I don't want to butcher it. What if it's like not that off? Because I used that blue line to like structure this whole thing. So let's go back. Why would they tank it now when they're improving their balance sheet? Doesn't make any sense. Look, go Chiefs. I'm going to say the same thing I said to JP the other day. I don't necessarily think it always makes perfect sense from a fundamental standpoint. Like, we didn't know why they would maybe tank it and come back down to 450s on AMC, except from a technicals perspective, it looked like it was maybe necessary. And at this point, unfortunately, it looks like we're even doing some kind of a head and shoulder business right now. You know, JP said the exact same thing. He said, I don't see why it would do that. It already made higher highs. It already crossed the creek. Why would we? And now we got this big breakout. Well, we were up here at like November 26th. Why would we possibly go back down? I don't know. You know, I could have said to him at that time, and I may have mentioned it, like, I'm using him as an example, but it's, you know, it's whatever. It's a kind of an everyman argument. It's an understandable sentiment. Like, I get it. I get where you're coming from. Why would we go back down? It doesn't make sense. Blah, 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 blah. Well, part of the reason you might go back down, if it's actually bullish, is because people want to buy in. The concept of being a bull, not just upside. It's also institutions driving the price back down so they can get big buy-ins and get out the people that are in the play. If you want control of a stock, you don't just keep letting retail run the stock. You drive them out. You play a game, you drive them out. And as many people as are buying and holding doesn't move the price of the stock. Actively trading the stock does. So there could be a billion shares or billions and billions of shares that are being held on the stock. Fundamentally, it could look great. But if an institution wants to drive the price back down to check those levels, they're going to flip and do it, you know? And there's no amount of retail like sentiment about how positive the stock is or whatever that's necessarily going to stop it. You have to have some other institution come in. I know it sounds horrible because you're like, wait a minute. I thought the whole point of this GME thing was that we're fighting institutional involvement and we're squeezing them out. That's the assumption that all institutions are short, and they're not. A long is going to take the price back down just like any short would. Prove me wrong, you know what I mean? Like 100 plus years of observation on the stock market has shown that that is normally the case. It's not complex. A Wyckoff accumulation has pushes to the downside, right? Why in the world would you push it to the downside if you're buying? Well, duh, because you're wanting to get a better price on the stock. When you leave gigantic openings, it's usually, again, one of two things. Either you had a breakaway and now you're fundamentally very different than you were before. You can't go back down. That's like case of like your Teslas and stuff, right? Like, yeah, your Teslas and stuff obviously are worth a lot. Now they're continuing to rise. You're not going to go back to those early levels that you broke out of. No. But if the argument's there, then it would have to also be that there's no reason to go back, right? For GME. I don't know if there's no reason to go back. I don't see the check on liquidity down there. There isn't one. How could they do it? That's just as easy as pointing to the chart and saying they take it up in order to enlist sellers. They create moments of despair where people think it's going to run and then it doesn't go. And then it sits around for 10 months or whatever it is. I mean, it's the game of institutions. It's a tale as old as the stock market itself. You know, when we look at the big picture, I don't know what to tell you except that's where it goes. You know, and maybe there's never going to be a time where it goes back down, like ever. But if I look at this and I say to you that like this obviously won't go back because of fundamental things, it's going to always stay above this price. I don't know, man. It's not like that bankrupts the stock. necessarily. And again, it's a matter of perspective. Did this make enough checks? Is it going to hold up? Does it have the buyers here to support it? I can't answer that question. You don't know, and I don't know, but I do know that they left a liquidity gap open, and that clearly, again, without prejudice here, I'm not sitting here saying I want it to go down, so I'm trying to make it fit. Without prejudice, I'm telling you that there is a very clear and distinct possibility based on the final move before this big drop and the jump over that move that there would have been an intention no matter what happened, right? This is a 50-50 move. This is not just a short squeeze. I know that people say this kind of stuff, they're like, it's got to be this, it's got to be that. Well, I'm sorry, there's no possible way that this is just a short squeeze and it's not somehow still a technical play. And maybe that comes from me, my experience, but just look at it. Tell me that I'm wrong, and then look at it, and then you can't do it, right? There's no way to look at this and say that was not somehow technically perfect. This is exactly the model that we use to determine wave movement all the time. And this is exactly the setup that happened from 2002 all the way to 2013. It's the directive move of the bulls. It's still following the same principles as a technical trade. So if I looked at this in any other trade, this is what I'm trying to say. Any other trade, if I saw this, if I saw a cat ear move, right, and then it goes down and it forms a spring and it moves to the upside, any other trade, if it were not some macro version of GME, again, anything else in the market, give me a stock and I'll go look at a micro. I'll find something just like this. If I looked at any other trade and I saw that, I would be talking about the same things I talk about all the time on AMC. I'd be saying, oh, it's a 50-50 swing up to the upside. It ultimately will probably, if it has an SOS, it may come back down for what's called a backup. And in this case, we've got two trajectories. One is kind of higher than the other. We already hit one. I know I'm making this more dramatic, but I'm trying to illustrate a point here. The other is a lot lower. It's down here, right? And this is the one that's caught me concerned because it's the actual 50% move, so to speak. There's a secondary one that actually moves to the 50, right? I'm kind of making this butchered. Let me go do this. If I saw this on any other trade, I'm trying to be as sincere as possible without prejudice. Again, I'm not saying that I want it to go down there, but if I saw this on another trade and I saw that 50-50 move, my immediate assumption would be that it makes a 50%, potentially makes a 50% retrace at some point and comes back to check these levels right here in this area. Now, did it do that? The answer is yeah, kind of. So what happened is we came back down and then we made this little dip below it and then we rocketed up and we jumped a creek. I'm going to make it really exaggerated so you can see it better. Okay, does that mean that it's done? It could be. Yeah. I've seen enough of this kind of stuff to know that there are times where, yeah, of course, if it made that check and it did not break the first creek, if it can find support, it's good. But I'm most concerned about this. This is always what I look to next. I look to the next 50-50 and I say, did it make a move that makes sense to have another wave back down? If the answer is yeah, it did, then why in the world would I assume anything? This made the lightest of checks, and now it's kind of floating up here in what looks like could be a cat ear motion. Is it possible it just advances from here? Yes. Yes, but that's what I'm saying. It's a very clear, it has to get above the top kind of thing. This is not one of those situations where it moves right now at 32 and all of a sudden you could assume it's going to go up to 260. I don't think that's a possible assumption right now. It just doesn't make sense. Like it needs to now make a higher high in advance, because if it doesn't, and this ends up being what we call a cat ear, guess where it's likely to go? It's likely going to go back down, and this ends up being a sign of weakness that actually was pointing to where it was likely going to go later, because they're trying to do a low grab for liquidity. And arguably, like at this point, you might as well just sit there and say it seems very likely that they're doing a retracement in order to get back down to some breakout level here or whatever. It just so happens that, yeah, that is exactly where we broke out right here in February of 2011 as well. All those intersections are there. I'm not inventing them. I'm not like making them up. They're not me like trying to say, oh, I think it's going to go down so I could be like hip or something and be different and contrary. All I'm doing is looking at the chart saying, yeah, right now this is positioned down. It could break out. It needs to get above 50, but there's a lot of bear side evidence right now that suggests that this is not the intended target up here, that this was not the intended target, at 10, right? That this was just the first attempt to maybe get below the floor on this original backup, so on and so forth, right? And then we can just keep going from there. And yeah, there's a long-term triangulation that happens right here. Do I think that that signifies some kind of value that they want to go back? They, being like institutional traders, may want to go back and check. Sure. And why not? This is the thing, is like, I get where you're coming from like fundamental standpoint. Yeah, it's improved itself, but like this is just a retest of where it was for years. Years and years and years. Do I think again it has to happen? No. But if I looked at this in any other chart, I would immediately have a suspicion that this might be the end that's in mind. Because of that little sign of weakness, because it's up thrusting and creating a new top, that this is actually like a gigantic move to the downside. And it wouldn't be any question in my mind that this could be used as a distributive effort in order to drive the price back below, right? And try to get down to some other level before actually like leaving, if this is the goal, before actually leaving and getting out and having what I would call like a massive, massive squeeze. And all this is, in the end, is it's basically just an SOS with a backup. Like a sign of strength that came down and checked the previous top. It did do that. But ultimately, like, it's checking that top. It could go back through it again. We don't know for sure that it won't do that. So for me, it's like, I get where you're coming from a fundamental standpoint. Maybe it's harder to make that argument that it does ever come back. Maybe the squeeze takes place right now and it goes above 50 and just starts going. But I said I would be really nervous that this would end up being like this motion up that then is used to kind of drive the price as low as they can possibly make it go. There's a lot of if-then statements in there, but this doesn't seem complex to me at all. Like, it seemed really, really, really simple to me. Really simple. And for that matter, like, you don't have to look any further than like this motion right here. Like the proof is already there. I don't need to provide that. Even this period right here, it broke out, right? And it came up to the top. And I think there's probably a lot of people who were like, it's going to go, and then it just starts going the other way. And it has like the most historically long sell-off it's ever had. And it's like, that secondary move to the top, like that's a distributive action. Like that kind of thing should be something that we're considering right now. We pushed up to $64. Do you see where that is in like the grand scheme of this? Like that should absolutely be part of our language, that this could be an attempt to push back to the top just like it was here in order to drive the price down. Yeah, but this wasn't predicted by that downside, like you're saying. It wasn't some kind of a cross down, wave right here. Yes, it was. It's the same principle that I'm using right here. It absolutely is the same. You know, when we go back and you look at where this landed and you look at the original trajectories that were built here, it's going to the same place. Yeah, but it's going to squeeze because, I don't know, reasons. Well, look, there's a lot of good reasons to suspect that it's not the same now as it was back then. Obviously, I'm not trying to argue about that. I'm just saying from a technical perspective, the idea that this could go up and try to distribute at 50 and then drive the price down low in order to come back and get a liquidity that hasn't really been checked in a while does not seem crazy to me. I would even venture, without even looking at it, I would even guess that this is probably like the golden pocket or something, right, of the big move. Why would you say that? Because it almost always makes sense. What the actual F, Booksy? How did you do that? I didn't do it. This is the power of a manipulated market. Why in the world would all this triangulation be pointing to an area years out in the middle of 2026 that's a 618 retrace of this massive move? I don't know. Maybe they actually want to retrace that much. Maybe this is an A, B, C correction and they're trying to go back down before a continuation to the upside. You can look at this however you want to look at it. You can look at it with the lens of like it's only bearish. You can look at it with the lens of it's only bullish. But there's no question in my mind that just despite how much involvement there is in this stock, that this could be a secondary action to come back up towards near the 50s. We don't know how exactly far it's going to go, but come back up near the 50s in order to drive the price back down. How does that work with all the other stuff you talked about, Booksy? You said something about a 2025 move to the upside and so on and so forth. Yeah, it's confusing. You're like, that's completely the opposite. You said 2026 was going to be good because of February and all this other stuff. Yeah, there's a lot of indication that you could be up here. Why? Because this is not a one-sided coin. This is this is a two-sided coin. There's a bear and a bull thesis here at play all the time. But there's no doubt in my mind that at this point that that's the goal, is to bring it back down here. So look, man, this is not me like grilling anybody. All right, I'm grilling the argument that it can't come back down. Okay, so if you don't believe it can come back down, that's an opinion. You are more than welcome to hold that opinion. And I don't disparage that opinion. I think that there's plenty of reason to suspect that it doesn't come back down. And I think you can make a good argument for it. That opinion is not what I'm arguing with. I also agree that there's a huge fundamental difference between what was going on back in these time periods versus what's going on now. I also agree there's a huge institutional and change in involvement, a retail change of involvement. There's all kinds of things that would need to be considered. This is not a technical trade that's done in a vacuum. But this is the nature of the wave analysis that I do, and I don't think it's wrong. I think that it tends to be looked at skeptically because when I'm saying these things, it's like it would be like back here when you're at when it was at like $10, you know. This is obviously not what the price was then, but when it's at $10 in 2015, telling everybody that you think it's going to go down to like $1. Well, that would be rough, right? Like people would look at that and say, yeah, that's not happening. This ain't fundamentally worth $1. That's way off, you know, and it's years away. So it's like, how in the world could you possibly predict that years in the future? Like it wouldn't make any sense, but it's there, you know. I think at the time I may have looked at this and done something like I did here with this guy right there and suggested that it goes a little earlier. I do the triangulation a lot, right? So if I looked at this, I would have said probably if it rejects, then you're looking at coming down to like maybe $1.70. I would have been like, that's more likely. This is what happened on AMC when we came down and we did not make a rebound at like 11. And I started talking about how like, well, it looks like 6s in the picture. And unfortunately, if that breaks and it looks like 3s, and it's like, you could see it written in the chart. It doesn't necessarily mean you get there, but like, yeah, this would have been like the same idea. Like it's triangulating here. Does that mean it's going to go even lower? I don't know. I have no idea. But I know that then this retracement, but I know that would have been what I would have looked at. And I would have said, probably it's going to come down at least to $1.88 or whatever if it breaks. And that would make sense to me. We're doing the same thing on AMC right now. And I've had plenty of people who have been like, it's not coming back down to the 2s. It's not coming back down to the 2s. It's not coming back down that low again. It can't. It's fundamentally broken. It's not the right value. It's never going to do that. Maybe it doesn't, guys. That's not what I'm here to do. Like, I'm not here as a crystal ball to tell you exactly where it's going to be in the future. What I'm telling you is that that's not fair to me, by the way. What I'm telling you is like that's the direction that we're going, right? Should we break down? Like, should we fail to continue this path that we're on and we do not hold certain levels, like it's going to go down there. Right? Then it will. And that's not, for me, it's not really a question. It's just the way the chart is. It's just like, oh, that's just where it is. There's a huge amount of triangulation down to like the 220s. So like, why would I sit there and say to you that it's not possible? Like, it's possible. Do I have to understand fully, fundamentally, why that could or couldn't happen? No. And I don't want to be like this bad guy either here, but like, guys, you all know this is true at this point, that it was not fundamentally valued correctly when it hit $76 or $72 or $60. It wasn't fundamentally that much worth that much. That company couldn't have been sold for that much. It was way overvalued. When it was at like $2 or whatever, and then it rose to 72, there was no fundamental reason for it to go that far. Like, not really. Except to maybe, again, if from a charting standpoint, to take it up in order maybe to drive back down and redistribute, maybe for a much bigger picture wave, right, which we've talked about over a longer period of time. And then, of course, you have elements that perhaps were not controlled, like the massive amount of retail investment in such stocks. Certainly, nobody predicted that, but did they control it? Did they make efforts to control it? Probably. And I think it's evidenced in the chart. I think it ultimately goes back to this idea that like AMC and GME, for all the good that they did, they also did a lot of bad to people. And at the end of the day, like they used the chart that existed, right? They used the chart that existed to like cap off where we moved, et cetera, et cetera. Like the bullish trends on AMC were always there. Like they're just there. And that's the idea of wave analysis, right? So if the bullish trends are there and there's not really a good fundamental reason to go there, but we went there anyways, is it possible that those bearish trends are there? There may not be a good fundamental reason to get there, but we're going to go there anyways. Is that possible? Yeah. I would be very biased if I said that was not possible. That would not make sense to me to look at that and say, that's not possible. Well, it may not be logical from a fundamental perspective, but I still think they're targeting it. I mean, they were targeting it as recently as March 2024. That's kind of scary. That's not like past news. That's recent news. That's within the last 12 months, So when I look at that, I'm like, they're still targeting that level all the way down here. They may not get it. Maybe something here happens that's unexpected and they're not able to get the sellers that they need, but it's still there. So this ultimately was like an aside just to say that like, yes, I think it's possible this could be building out towards a distribution. And if you have that in mind, it's not a long-term, it's going to distribute forever kind of thing. This could very much be like an S-curve down that builds out and then breaks out and flies. Then it really does have like a massive short squeeze. And honestly, as weird as it seems, it's probably about the same. I mean, it looks like it's the same, right? It'd be the same move. Then you could have like the same exact move and meet the channel. And again, from a technical perspective, it seems kind of crazy out there to be like, whoa, it's going to fly like that far again. Well, it did it already, you know. Maybe the idea there is the same, that if they can accomplish it again, they're going to accomplish it again by going to a 618 retrace and then pushing back up to the upside. And this is just the path that you take to get there. Do y'all want a 9,000% move? Probably, you know, because right now, based on where these trajectories are, it's not likely going to get over 250 or thereabouts, maybe 300, you know, if it just continued up, which is about less than half of the bigger. This is only about halfway down the range, so, or down the channel, as it were. Some people are gonna be like, well, your channel's wrong. It's steeper or something. Maybe. I don't think it's wrong, but that's okay. We can disagree about that. I think it's exactly where it needs to be based on this trajectory here. And therefore, this triangulation makes sense to me. I don't see it as like a bad thing. I see it as it's going back to retest a very historic floor, you know, that it essentially broke out of and never checked. And it also generated a creek right before, well, not to say right before, but it was really years before, that also wasn't checked. That would lead you back to the same place without necessarily breaking down, which is a positive. I think if we looked at it from that point of view as like, this is potentially like a local distribution along this green middle, right? Potential. It's not like happened yet. We don't know. But if it goes up to 50 and it starts selling down back through levels, you're sort of done, right, for now. Potential distribution to try to get you back down to even like the 0.5 retrace is something we haven't hit, which is like 870, you know, even just to get to there, which is possibly like maybe it just stops there. It doesn't go any lower, you know, that's as far as it goes. And it's kind of somewhere in the middle, like, oh, it did come down below, but then it ends up breaking out again. Could be totally possible, you know. But even if that were the case, this idea that it could be like a localized distribution off the center has to be considered given the way this is set up. This massive U-shape, you know, with these upthrusts. And I just feel like it'd be wise, and from my point of view, when I'm trading it, I'm not trading in and out of shares necessarily, but I do have, at times, contracts. I think it'd be wise to not assume it's going to go really, really, really high unless it breaks above this ceiling here. There's just a lot of resistance possible right here. It's historic resistance. So, and then there's also this big picture analysis that I look at like, well, it kind of seems like they set it up to possibly come up, distribute, and then try to take it lower. As in, you didn't have enough ammunition to drive it down here, so you take it up higher to enlist sellers, and then you drive it down in a bigger flush. You kind of repeat the same motif, but you do it at a faster pace. That's the idea of iterations. You take it up, take it back down, that kind of thing. Yeah, so not a question in my head about could it happen, maybe a question about will it happen, and if I'm going to consider that as a possibility, then I also have to consider the possibility that what we see right now isn't what maybe you want to have happen. So big picture is going to inform maybe the smaller scale here. And I don't need to belay the point or just keep going on the same ideas over and over again. We can just leave it at that for now. It's been a while since we looked at GME. I'm making a case that this, from a big picture perspective, this is very critical. One, it's not quite as important right here as it is up here near 50. This could be thought of as kind of like a swing, like a S-curve, right? Just to get you back up from the creek jump, maybe to get you back up to the top. The way it's presenting to me, again, I'm seeing it like 43 could be a big problem. You know, that's about 50% here of this S-curve, and it is where I've got my targets, and it is that big macro center line. I think that could be an issue, but I think that there may be perhaps, who knows, there could be some kind of like a wick to the upside or something that goes to near 50 and then drives right back down through that level or something. We don't know. it doesn't really make a huge difference. It's kind of what happened back here anyways. If you look back at June 3rd, remember it went pretty high in extended hours, but the actual trading doesn't go above like 48, and then ultimately it closes below 40. So it opened at 40. It actually closed really low at like 28 or something ridiculous that week. That's a big week. But at the end of the day, like that's where the body of the candle is beneath this mark. And then everything else is kind of secondary, just there. It's an up and down motion that didn't go anywhere. So when I charted it, I don't know, a month or two ago in October or early November, I had said that I thought this was like a likely place to stop, and we were going to intersect around here, and it did, and that was cool. But then I said if it makes another move, it's probably going to push up towards the 40s. And I picked a conservative number, but I know that in my head, I'm also thinking like, yes, that's likely, but there's also this possibility that it does have a pretty nice extension to like 50s. I just think it's an extension. I don't necessarily think it means it's going to run. Okay. AMC, this is not a new chart. This is kind of the same chart, but I thought I'd take some time to go back through this one more time because yesterday I went onto the Discord group and there was some like debate about whether or not you can know where the chart is and this and this. I think it's a good thing to debate. I don't think that, even though I present my opinions very strongly because I have a microphone and I can talk to like, you know, a chamber, I think that when you look at this big picture, I want to suggest that the way that we did it was probably the best way to do it. And there may be a better way to do it, but I don't know what it is. And I spent like, you guys remember I did this on the day that it was the day that the dilution was announced and we dropped that level. So it wasn't that long ago, but it was like kind of the first time that I really went back and tried to examine what this pre-ape and ape junk meant. And what I concluded was, without going through another 5 hours of like mathematical, you know, craziness, which is what we did that day, what I concluded was it was about a 226% shift. What's confusing about that is it doesn't apply to anything before, you know, the actual split. So like if you look at this and you see this value back here, the reason that is there, this is not a bars chart. What it is like I didn't copy a bars chart and push it up. What it is it's just a simple formula. I've done this before. I did it when we had the ape and AMC thing. I used a more complex formula. I would say complex. It really wasn't. It was just a function, an equation that gave us what we believe to be a truer value for AMC. But you can do this kind of stuff. You just type it in. So I typed in AMC times 2.2636, which was the number that we got, in order to get the shift. When we did that, a lot of things clicked into place. So this area here presently was suddenly like, oh, that's really relevant, you know, left to right. The ideas of like, oh, we came up to this height. Well, this height is actually, you know, basically testing the bottom of the January, February backup 2021. It's kind of incredible, right? When you look back and you see where those levels are, and then you see how they relate to that previous trading zone. The argument that I've made, I suppose, if you want to call it that, is that this would make sense because you're trading liquidity, and liquidity would be determined by a computer, not necessarily based on the price of the share, though that you guys might say, well, yeah, it is the price of the share. It's the end result of what that means for the value of the company. And if you're going to compute value, then you'd have to do this equation and then look at what the valuation was here versus the valuation here. And so the argument that I made that day was that it's a question of valuation, not a question of necessarily, oh, it's just some fancy shift around number and they're doing some mental gymnastics and this and this. It's really about value, market cap value. And we talked about that because on the day that the dilution was announced, they had all these interesting numbers in there about the valuation of AMC, and they were talking about it in like the 10s and like 1060s and all this other stuff, and I was like, I don't get where that number even comes from. And then we found out that that comes from this valuation, and it is trading below its healthy value, in my opinion, like its actual value. But in theory, like the reason it's doing that, we don't know exactly why. Like, I think there could be a thought that like it's being taken advantage of. Some of it just seems like valuation based on a shift. That's not technically wrong. It's just that this is where it belongs now that the chart has had that reverse split, and therefore it's not ever going to go back to here. But in terms of valuation, like this is really, in theory, where it actually is, which is, again, it's kind of a strange thing to say. So what you would do is you'd look at this and you'd say, okay, we're trading right now at $4.19. Based on valuation, according to what happened before the split, right, before APE and the split, I should say, both of those things, according to valuation, we really are trading at, quote unquote, like $9.30 or something, okay, based on like market cap value. But as it relates to, so this is not possible to do. You can't just look at this and say, well, really it should be $10. No. It's more nuanced than that. This should be, and this is where maybe I get a little lost in trying to explain it. It's not that AMC is worth $9.50 right now per share. It's not. It's worth exactly what it says it's worth, which is $4.20 per share right now. The valuation, the market valuation, though, in relationship to where we were, and that's the key, the actual valuation would be here in relationship to where we were in 2020, that's where it's kind of confusing. And I think it's a hard thing to explain, but it's sort of like if you look at where we were in 2020 on the bottom, this is more or less where we would be trading had those events not taken place, APE and the shift, in terms of valuation. Because those events took place, we are trading in the right area. But if you were to go back and you look at how it would relate to that past time, this would be accurate, not this. So like, because again, think about it, okay? Imagine for a moment, let me explain it this way. Imagine for a moment that they just reset the chart suddenly. They're like, you know what? We're going to go back. They can't do this. But imagine for a moment they were like, you know what? We're going to go back to the way that it was. This is going to be 292, this original bottom or whatever it was, 192, 292. And then wherever we are now, we're just going to convert it. Well, that would be a big slap in the face, wouldn't it? You guys are like, no, we can't do that. Why? Because in order for that to happen, this is like 1050, right? In order for that to happen, you'd have to basically say that this is 5x down. Well, take $2.30 and divide it by 5. You're going to be in the pennies. So you'd basically be saying that, well, according to this chart, then we should be valued at like, this was actually like way below $1 according to the original value. If no value was truly lost, then you would have to say that that's the case anyways. It feels nice to say you're not trading below $1 for sure, but like if this was 292, this would definitely be way below $1, right? What that doesn't do though is it doesn't take into consideration the APE portion of it and like what happened in the APE portion of it and where we traded and how that affected the valuation and did it affect the valuation of AMC. It also doesn't really take into consideration what the reverse split then did afterwards. It's just sort of kind of like most basic way of kind of boiling the numbers backwards. So even though I'm saying that and it's kind of like, yeah, this doesn't really matter then, Booksy, does it? It does, because I think this shift value in the chart, if you do it, and I know I'm going to get roasted one day over this. Someone's going to say like, that's wrong. You got to prove it. And I'm going to be like, dang it, guys. I'm not going to go back. I'm going to have to go back and watch my own stream. How did you do that, Booksy? I don't know. if you're looking for a mathematical proof, I can't provide it right now because I'd have to go back and rewatch that whole stream and make sure and write down like every step that I took. I know that in my brain that I'm pretty sure I did it right and I worked pretty hard on it and I'm almost positive I didn't miss anything. But if you ask me to like prove this right this very second, I'm not gonna be able to do it. Okay? I'll just say that. But what I found was that if you look at the valuation of what was traded, we traded mostly right here. And at that time, it was like $3 to $4. It doesn't represent itself as well currently, though the price is still pretty close. It's like 2.6, 3.7. It's close to like 10x of 3 and 4, right? But it's like slightly down below that. And if you look at APE and AMC, that's where it was trading. And at that time, again, just to kind of repeat a little bit of where this came from. At that time, I said that it looked like on the combination chart that it was setting up a macro S-curve that was going to lead you down to about $1, which again, I was derided for, and a lot of people were like, that's never going to happen. We're not going to $1. In truth, we actually went lower than that if you're just looking at those conversion values. What this suggests, though, is that that's not really true either. That's a kind of a very simplified way of looking at a shift and saying that like, well, now if you go back, we're just like way underneath the bottom. I think they did this on purpose because I think that shift value that I ended up coming up with solves all the problems. So what it does is it essentially like perfectly shifted the chart from within this structure to right below this structure. It also perfectly shifts as a result to looking like a giant kind of drop beneath this floor. So they accomplished kind of like two goals, I guess, in the shift that were effective, right? You maintain the integrity to some degree of a chart by essentially saying that like, by doing the shift value, and I got the 226 on there with those little green lines, you essentially like maintain the integrity of the chart by dropping it to beneath this intersection right here from where I quote unquote would say it would have been valuation wise, again, what the actual value of the company is versus this 2020 area. What this helped me to do though is to see things in a different light. And when they did this, I don't know exactly if this made sense, if this makes sense to you. It kind of makes sense to me because what they're doing in some ways with institutional movement, what maybe we should say not institutional, but what AMC did, because they're really the reason that this chart shifted like it shifted, is essentially they gave it's like they took a value that was kind of a fixed value and just dropped it down to another fixed value. So it becomes this really clean conversion. And when I did it, I was like, yeah, it looks pretty darn good. And really none of this makes it, like doing the shift and then looking at it does not ruin anything. Like it actually fixes a lot of things, which is a good thing. So had this come around and been like really confusing and wonky and off, I would probably been like, no, that doesn't make any sense. You can't just be there. That number specifically came from, again, a lot of mathematics. And so what it is, again, this is confusing. I get it. I'm trying to explain it. I'm not doing a great job. What it is not that this should be valued at 571. It's that if you were to convert the values back to the original value, it would be more accurate to say that this particular place on the chart would represent the value in relationship to where we were in 2020 if none of the other stuff had happened, which means that this was 292. This is something like $1.58 if you do the math right. So this low doesn't equal, 30 cents or something doing the conversion. It's really like $1 something. Like $1.50. The scary thing about this, which I found very kind of disturbing, if you will, is that when you do that, and this is where things kind of clicked in my head, when you do that and you look backwards, I don't think this is necessarily the best place to do it, but if you do that and then you look backwards at where this may go, actually that's not the best way to do it. The best way to do it was looking at the drop here, because we had determined like, oh, it could go down to like 226, right? Well, what's crazy about that is the conversion value is in $1. And if you were to go back and you look at where that is value-wise, that's not why I did it, but it is there. It's at $1. So basically, like, if this drops down to $2.26, it's as if, and we've already been close to it, right? We were at $2.39. We weren't far off. It's as if it's valued at $1 compared to the valuation that we had here. Again, it sounds offensive in some ways because you're like, this ain't value. You shouldn't be valued at $1. What the heck? It sounds like offensive in some ways, but it's not, because back here it was like $2, you know, it was in the twos, you know, 292s or whatever. It's like real low. So for us to kind of be at this bottom and chopping along the bottom again isn't exactly unusual. And if I took this from that perspective and drew it out differently, like we've talked about this before, this would not look really weird to us. I think in retrospect, looking back, if this were like a sign of weakness back here, and then it came back down and retested that floor, and it never broke that trend, and we were just sitting here looking at this structurally like this, I don't think any of us would be particularly concerned. I think we would just be like, okay, so it's going to try to break that creek, right? This is how we would look at it. This is kind of what it is. Like, oh, so it's going to try to break that creek. That's what happened? Yeah. Does it have to go then and do what happened in 2020 and make like a new low? No, it doesn't have to, but it could. And if it did, then you would expect to cross the creek lower and then probably rock it. How often does that happen in the market, where it drops beneath liquidity and then breaks back out? You tell me. It just happened on like GME, you know, like it dumps beneath a level that's like a historic support zone, and then it ultimately, if it can jump over, it crosses. That's the nature of a creek cross when it happens in the midst of a spring. It's not unusual. So like if we were looking at it from that perspective, I think most of us would agree that like that would be the moment that you would expect there to be like boom boom stick candles. That's a reference to Muppet Treasure Island. You guys are like, what? Muppets. That would be exactly what I would expect, right? Like something like that. Maybe it doesn't go that high at first, but it would be like a push with then a backup on this top. This is starting to look a lot like 2021 all over again, because it is. That would be the expectation if it dropped down. If it went above, like it found what we call like an LPS, which is like a higher support, our expectation might be that it would make a double bottom. So this is the interesting thing about the chart as I see it right now, and I was trying to mention it, but I don't think I did a very good job. Is it the alternative is if that was enough, and this can make a support here, this could be like a spring reaction with a backup, like a test. But then the question is like, well, where does it have to go in order to make that retest feasible? There's only two spots that make a lot of sense, maybe three, right? You're either going to pick, and again, I think all of these are kind of dependent on, again, perspective, but there's really only maybe two spots down low and one spot up high. So the two spots down low would be the gap fill. Essentially, like this was a floor that was created. That is not unusual. It sounds the same. It's like 291. It sounds the same as the original bottoms. So like maybe that's what they choose. I don't know. It is weirdly the same. But that's technically below the floor. So that would be like saying this is a phase B bottom, and what's going to happen is that it's going to go down and check like a phase B bottom, and then that would be an LPS where it doesn't go below it, right? So this is the spring where it goes to a new low. This is like its own category over here, all right? Ignore the fact that it's to the side. I'm just moving it over. If I were using a LPS method, I could say that maybe this just goes down, finds support at the phase B bottom, right? Maybe you think that's the phase B bottom. The other place would be the intersection right above that, which was this floor at 350. I'm not as huge of a fan of that one, though it does come up quite a lot in some of the targeting. Mainly because I think the reason I picked that one is because it has the bounce before the drop in. It is a whip around. You can see like the rejection there and then the push back out. So it's definitely been used as support and resistance. It could be a good bottom potentially to go to and hold support. Not as huge of a fan of that, but I think it's a possibility. And then the final one is really the original bottom. Well, where's the original bottom? You guys are like, well, it's up here at 10. You got to go all the way above 10 to get to the original bottom. Yeah. What's interesting about the chart shift, and I've said this before and I'll say it a million times if I need to, is that the way in which this chart was shifted enabled them to continue to have the same lines. So what's really fascinating is if you go look at the waveform one that I kind of messed around with, where I was copying the wave analysis, and I was like, oh, it's the wave from 2000. I've done it like a dozen times now, right? It's the wave from 2021. Why is it the same? It's shifted over. Yada, yada, yada. Okay. And then there's that interesting little shift in the chart, right? There's a triangulation down bottom that they met when they did that because they used the original bottom. Again, they shifted it down. And institutions or AMC, higher execs, whoever it was that decided those numbers should be what they are ultimately and drove the price to where it is, use those as logical supports, right? And they drove the price in such a way that when you go back and you look at where this is in the grand scheme of things, and I'm going to turn off this other one, it's kind of amazing to me because I'm like, how in the world, you'd have to like, again, quantum computer it, I guess. When you look at that layup value, it's the same layup value that you had in 2021. In theory, if you found your support anywhere down here and you make that move up, it's essentially like exactly the same move. And what's really interesting is that move itself, again, it's pretty much exact same move. Okay. I'm just going to show you again with a quick doodle. It's pretty much the exact same move off of the floor to get back to that middle. And what's amazing about that is that's actually where the floor is now. So it's like, if you're sitting there saying, well, the floor is still at where it says it is, Booksy's at 10, I don't disagree. And what's interesting is that the January quote unquote move from where we stand would get you there. Like it gets you to that floor. It's the perfect layup for it. That's interesting, right? Yeah, it is. What's even crazier is that when you take that into consideration with the shift and you think about where that is in relationship to everything else, notice that particular level that we're talking about as the floor, if you go back and you use the valuation, is really us breaking back above 1142 in the current time zone. But look at where it is here on the shifted value. So this is where things get kind of like, huh, that's interesting. Notice that in January, okay, if you look at that shifted value compared to where we are now, look at where that is. Tell me that's not spooky, right? It is spooky. It's weird. It's weird because that top, which we've been calling like 520s, that area right here, at the peak here at like 510, that is essentially like where the January move is, you know, roughly. I mean, we could go back and forth on this and talk about exactly where it starts, you know, whatever. But that's where that build out ultimately finds its footing and then takes off. And it's really bizarre because if you look at that, it's like, oh, well, are we being kept below right now that value for a particular reason? Maybe. And then what's even crazier is that when you look at the actual intersection of what we just went through and you use the creek lines as I have them on here, this actually did push the creek. This just barely checks it here and then dives beneath that breakout level. You remember how we were talking about that potential to like ride up here? Like we had placed it here. It's like, oh, that's where it should have been if it was going to go up to the top at $6 or whatever. And it seemed like it just deviated. It didn't go there. Look at what that would have been on the chart shift value. Had this like kind of held here, that's essentially like two things, like two huge things, right? That's the same exact move. Okay. But using the valuation instead of using the literal chart as it is, that gives you like an SOS locally, yeah, on the valuation. It's the same principle, same idea. That 615 move, though, in theory, valuation is actually like a break above like the major creek valuation. Like this is the valuation terminals, like these two tops. It's confusing, I know. Isn't that something? But that's essentially like where it would be breaking right now. And historically, again, going backwards, looking at where that is, that 615 level, from a valuation perspective, that 6 to 650 level represents the same values that we were at in 2020, right before we took off and ran really hard. I don't think that's a coincidence. I think there's a particular reason that the operator does not really want to advance until they're ready. Now, what about 869, Booksy? Where the heck did that come from? If that's the truth, then why would you even ever suggest that it could just go to 869? Again, it's an interesting dilemma, but when you look at where this goes to here presently, that 869 actually represents something around the $20 mark valuation-wise, which was the bottom. And again, it seems a little bit silly because you're like, well, why would it go all the way up to 869 if that were the case? You know, that was all based on your original literal chart, not this valuation chart. It still works because that's the middle of the range previous. If you look back, that move right there to that particular intersection, we've been using like 869, you can say 890, whatever. It's this region here between 870 and like 890, or excuse me, $9. That area right there, when translated valuation-wise, is like the middle of, it's like the same as saying the value of the company in the middle of 2020s back here. I'm not saying it's going to happen because obviously like some of those ships have already sailed. We have to kind of take the chart as it is. If it doesn't go, it doesn't go, right? If it rejected and it's not going to go, it's not going to go. But like it wouldn't have made no sense for us to have pushed up. It would have been pretty logical actually to push up and then drive the price back low again, just like we did in 2020 to the similar value. But in order to get to the same value, you'd have to go up here. But in the chart shift mode, which is weird, right? You're like, what? So the same value here is not actually $20. It's actually shifted down. It's like 869, which is really weird because I was like, whoa, that's the same number. I guess it makes sense then why that number was coming up a lot as a potential target for that upthrust. And then it works. What's even more kind of weird, or I guess you could say weird, or you could just say it is just math, is that valuation at like the 869 mark up here does match the original creek trajectories, which is interesting, up before the shift value. So it's like that particular move is a parallel that still exists. It's not like it's not there anymore. It's just not as important. What's fascinating about it, again, taking away the chart shift, is if you look at where that 869 is, where that lies presently, it doesn't look that significant. But then if you like take that original value, I thought this was kind of bonkers. I'm like, what the heck? How would you have possibly, which is, I mean, I knew this before, I guess, that there was a possibility, but I had been using that steeper creek, and I thought, at first I thought we were going to go up there, but then there's like a shallower creek here. And really, like, it's the original creek, like from up top, like way up top. And these are all like push-ups that ultimately failed. You know, they do generate higher creeks. You shouldn't just ignore them. I think they're going to be used later on. But what's crazy is like that actually pushes up and hits that first creek. So like it works with the chart shift. It works with like that imaginary valuation that kind of doesn't exist, but you have to use like the relationship. It's pretty wild. Will I use this to chart going forward? Yes, because as confusing as it is to kind of think about, like, that's not really $8, that's really sub 292 or whatever it is. While that might be a little bit confusing, it seems like a leap of logic that's like, why would you make it more complicated? If the shift values are working just fine, just use them as they come. Like, why change it? Well, I think it matters to some degree because when you do these chart setups, it has to kind of make sense, right? So if I had said 869, right, and then presumed that like, oh, it's going to break out here and go above. And then of course you can see like the other issue is that this actually essentially looks like a break right above here. So you're like, well, then why wouldn't you just go all the way up? Well, that's the crazy thing, right? That's what I'm trying to say. Like, this is where things get kind of out of hand because I went back and I did it yesterday and I was like, what am I doing? Like, this is bonkers. If this had broken out and like in theory it just run up, right? And again, remember, you can't use this beyond the shift value. So you would still say, oh, it could go fill that gap, right? What's crazy about this is like, if it had gone up and you just used that shift value to fill the gap, we know the gap is essentially like right at the bottom of this triangulation. And we had talked about this before because I thought it was weird. There seems to be a trend going up right here. This explains where that comes from because this is a pre-split trend. This trend, again, I'm like, it's hard to kind of like make this stuff up, right? This pre-split trend didn't happen, right? It happened while Ape was there, so there was a piece of valuation missing. But what's weird is that if this were just the valuation chart and it had done its breakout and it just suddenly like rocketed up, right? It just went to the moon or whatever people want to call it. And it went up to fill that gap. What's bonkers to me is that triangulates, and it is bonkers, you know, it's crazy stuff. That triangulates to where the gap fill is and the bottom of, you know, the reaccumulation that happened in this jump. It's also the creek break here. And it essentially like is the base triangulation for where this gap fill quote unquote should have been. And I've used that really carefully because that's a really strange way to put it. But like normally if there's this kind of a triangulation and there's a gap right there at the end of the triangulation, it's a pretty good estimate. Like that triangulation ends up being pretty darn close. If you triangulate the last known trajectory for bulls and that gap, wherever the gap is, that usually ends up being pretty darn close to where you end up. But that would suggest that by January, you'd be up at like $45. The problem is that that's not actually true because that valuation doesn't represent where we actually are. And when I went back, I was like, wait, what do you mean, Booksy? Well, so that valuation would represent this $20 figure. You remember how all these people kept saying like it was going to go to $20 and all this stuff? And I was like, nah, I don't see how that could happen. It doesn't make sense. Well, it makes sense to me now because that would have been a target that you would have gotten based on the original gap fill valuation shifted down. Now it's representing itself as 20. What's even freakier is that 869 is 20. You guys are like, what the hell are you talking about, Booksy? I'm getting sick of this crap. It is the same because again, remember, like we were just talking about it, those are the interchangeable. Like this is the same move right here, but on a different value scale. Yeah, but you can't just do that. You have to pick one. You can't use one or the other. You can't just say like, oh, it's the same value. It's not though. It's relationally not the same value, yada, yada, yada. You should just pick one. It's also the same value as this waveform breakout. What's the significance of all this, Booksy? Well, the significance is that I had talked about this before, and I made cases that it was very likely going to come back down to the twos because of certain things. I also made a case that I didn't like the idea of the 20s because it didn't really make sense to break out early from the chart and advance too quickly. And then I also made cases that it really doesn't make sense to advance before June of 2025 based on this overall setup. I think you could come back down before you go up, yada, 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 so on and so forth, right? Well, that's not wrong. That's not like a bad way of thinking about it. It's just that when you look at like the big picture, it makes perfect sense currently to not do that move until later. But when you include the valuation chart, it does give me a greater sense of possibility. And I hate to be this guy right when we're like already down really far and beaten up. It does make me think there's a possibility that we don't actually go down low at all. You guys are like, what? Are you changing your mind, Booksy, again? Kind of, because in theory, a move to $20, even though it seems kind of absurd to me, it seems premature, like it seems too early. It does seem too early if you don't have the valuation chart. But if you have the valuation chart, a move to $20 is the same as a move to that gap fill, according to the valuation chart, which preceded, it was before, it was like before the actual shift happened, that was essentially where we were going to go. It wasn't that price at that time, right? But that is essentially like the reactive move back up could have been thought to be that way. And I think it's a bit weird, maybe. I'm not going to say like much else about that. Like it's a weird move, for sure. But like there's an interesting phenomenon that happened in this drop down because they created like what I call like an LSPY, which is just the last point of supply, where it's kind of up thrusting and trying to advance and it can't advance. When you take away the shift and you have the actual value, this S-curve completed perfectly, like it's done. This would just be like an auto reaction from that S-curve. And like a natural auto reaction would have made perfect sense. Like if I had gone back and looked at this, I would have been like, oh, so it's a drop that's roughly equivalent to the initial drop, you know, down to support from the top here to this midpoint, yada, yada, yada. It's not a 50% retracement, but it circumnavigates the 50% like perfectly, right? Back to where this, essentially where this ledge is. So if you take this idea of like, oh, there's a ledge right there, that's not actually like 50%. You take that value and you drive it down to where the actual reaction happened, the auto reaction, it is in the right place. This is one of those things that like principally we talk about all the time on the stock. I just don't always, it doesn't always work like exactly where I think it's going to be, but it's always there. Like the drop in value to like the ledge is always in almost all cases where that auto reaction goes, because it essentially is the breadth of the move down in the initial portion versus the reaction of the move up. It's essentially just a channel, right? And so we were talking about this like locally and how like my expectation, you all remember this, hopefully, give me credit. My expectation was that when this thing auto reacts, it's going to react that amount, right? We're not quite there yet, but we're pretty darn close. That this is essentially like always built out to be roughly like where the auto reaction is, because it's like the original drop down value to where like kind of those middle ledge values are typically is where your auto reaction comes back to. It's not perfect. It doesn't always work out, but a big part of that is just simply a nature of I'll do it really quick. A big part of that is simply just the natural course of action when you're creating like a trend. Like that would be the expectation. Actually, it did get met if you use the trend right there. That would be what's met. So I made a case that this was going to be the auto reaction. I talked about it and I said originally I thought maybe it goes to 410. It went lower, but then the auto reaction ends up being like roughly the same, meaning like it got to the same place, at least on the parallel structure, right? And there it is. I also said, and you'll remember this, that I thought that if that happened, it's entirely possible that when you break out of that area, if you break out of the area, that it essentially at that point would have a pretty huge move to the upside, and it's still very possible that that is the case. So what's kind of crazy is that like it doesn't seem likely because it's like channel bound, and you're like, well, just hit there and just drop again and go really low. Yeah, but it also intersected like historically like where those creeks are, right? These markers that I've got on the chart right here are the markers from up top. So it's the same intersection up here. I decided I would use that because I was like, you know what? That's actually probably the more accurate way to do the channel, because if I'm believing that this chart shift value is true, then I should translate it to where we are currently, and I did, and it makes sense. It actually clicked a lot of things into place that weren't quite in place before, which I found to be really interesting. It doesn't actually adhere to every single mark on the chart, which is also kind of a weird thing, because you're like, well, it doesn't look like it does much of anything. Well, it's because it's approaching that value presently. Like it's approaching that value that already exists, but it doesn't exist in our current time frame. You guys are like, this is dumb. This is like some interdimensional BS, Booksy. It exists from a valuation standpoint. There's a valuation disconnect, right, that we don't have easy reconciliation for unless you just do the work. But it's essentially like this was a historic place that we had driven. So imagine if you're like a supercomputer, and instead of thinking about trend as just rise over run versus price action, you're thinking about it as rise over run versus valuation of the company. Normally, that's very straightforward, because normally it's tied directly to price value. But if the price value has a massive change, like, I don't know, the creation of ape and then the coming back together of ape and then a chart shift, the valuation can feel like it's not there. Like it's like, well, where the heck are we? Is it accurate? Well, I mean, it is in terms of like a literal interpretation. Yeah, because it's still like the market cap is still going to be the value of the shares times the shares outstanding. That's not going to change. But if the valuation had been mutilated essentially through mathematics, then it's possible that your valuation is not exactly what it seems, and that's what I'm suggesting. So what I'm saying is that if a supercomputer, for example, just to say a quantum computer or something like that, we're using valuation metrics instead of just price, then the valuation metric of like this is a wall would always exist. Like it wouldn't have been calculated based on what we see as like trend lines necessarily, because those trend lines look like they go off to nowhere lands now, right? Like you could look at this and say like, Booksy, we haven't even approached this trend yet. It's not even close. Correct. We haven't. But from a valuation standpoint, if I'm right about what I've talked about, we actually have. We're approaching it right now. We've already hit it. So that valuation wall exists right here. That valuation wall that exists right here, this green mark, actually represents a valuation wall that we've encountered multiple times. And, perhaps unfortunately, what that means is that if you distribute back through there, which we've done, again, multiple times, right? Here's one time right here, here's another time right here, here's another time right here. If you go through that valuation wall backwards, you're likely going to have some serious sell down. Translate that to where we are now, presently, it actually makes perfect sense because it looks a lot like the creek that we currently have, which makes sense because, again, it's trading along those valuation lines. It means that if you drop through this like 380 pocket right here, it's the equivalent of like what happened to us when we were dropping through, not necessarily to that extreme, I wouldn't say, but it's essentially the equivalent of us dropping through in February 2023, or dropping through in August 2023, or dropping back through here when we fail to advance, or even here in March. When we fail to advance, we end up taking a trip typically to go back to the bottom, or to, if we can't do that, we may go sideways and have to attempt to jump. That's exactly what happened here. Like it tried to advance, it failed. So it tries to jump, right? This is why we were confused, because it looked like it was breaking out and then it didn't. had a change of character with that up thrust. You see that? That is essential to understanding what's going on right now, because if you think about everything we just talked about and you're still a little bit lost, just remember that like that valuation would translate much the same here. And therefore, you would have to conclude that it's very possible that you could go to the bottom of that trend presently in your current time frame. And you're like, well, where would that be? Now we use the second valuation shift, which is where was the original bottom? And you can see like it does have weaknesses here and there, like where it pushed through. There's certainly like lows, but on the whole, it's in a pretty logical place. And if you look at this area right here, this is ultimately like where the interaction takes place on that valuation with the actual bottom as it was before the shift. It's like right in this pocket. And it's interesting because I kid you not, and I didn't jack with these lines a lot, but it's very interesting because that's actually where the gap up is. It gaps up right to that value and then takes off. I found that to be pretty fascinating, right? This is the unfortunate part of all this. So if you were wondering, like, when's it going to go bad, Booksy? that would be ultimately like the death zone, I suppose. Like, I want to say if we're going to go there, but like, if this does eventually break down and try to continue to go down afterwards, I don't think it's going to get there to the bottom. It doesn't always get to the bottom, and that's important because, like, even in the original trend, even here, like when Ape was created, it didn't ultimately get to that bottom. It only hits that bottom in the near beginning area here. It gets pretty close as well, but really only hits it back here. This was like the big drop from top to bottom. This is the move right here that defines that structure. Okay, that's the biggest move we've made through to the bottom ever. And then the only other time we've done that, arguably, is presently. We did the same thing, again, from a valuation perspective. Right here, when we dropped back beneath, we hooked at the top, and we went all the way back through to the bottom right there. What's interesting even still, remember how we were talking about like rotational values? You guys are like, when is this going to stop? Rotational value matches. So like the determining rotational value here on this downward trajectory, look at that cross right there. Look at that trend right there. That trend that doesn't seem to do anything in our present time frame. Look at what it does with this ultimate like valuation shift perspective. You guys are like, well, it does something because we jumped above it right here. Yeah, but look at where it is in relationship to if the shift value had not happened, for example, and that was just value. Look at where that is in terms of that like creek cross. And I'm like, what? So it basically defines the structure of this downward trajectory in this like invisible land between worlds that doesn't actually quite exist. It does exist. That's the crazy thing. This isn't like a Santa Claus finding M&Ms in the, commercial kind of thing. It's like legitimately like this is evaluation that would exist, right? In a supercomputer's brain, it wouldn't have changed. It just would be like a mathematical formula would have changed a bit, but the ultimate end goal would not have changed, like that valuation. So what's kind of crazy is like that gives me a better definition for understanding like where that actually was in relation to all these other things. And then they use that shift value, which we already know, right? Because of where they shifted it to, they're using it as like a new, so like the value shift down here actually ends up being where it opens as well on the gap down. And then it's used as a new like creek. So does that mean then it's going to go all the way to the bottom, Booksy, and it's going to go down to like $1.36 in our time? No. That's not what that means. What it means is that if you look at the original kind of build out for that channel, that yes, in theory, this could have come significantly lower, right? It could be that is the case. I don't want that to be the case. When I look at stuff like the original sign of weakness here, it certainly makes me worried because when I think about that little SOW that happened, that little SOW, that little SOW right there certainly seems to suggest that would head pretty low. You know, we've used this before at different times to kind of think about it. I don't necessarily think that's the truth, but certainly it does look like, oh crap, this thing could go to like $1.40 or something. Well, that would be horrible, right? Nobody wants that. And I'm not saying it's going to happen. That's not what I'm saying. But certainly, like, it's there. Do I think it's, again, inevitable? No. What I think is more likely is that what the operators are doing is using this valuation process to navigate as low as they possibly can beneath the original valuations. When you look at it from that perspective, again, with the original valuation in mind, I'm going to do a little doodle here, and you look at the interaction that occurred presently, all right, and you take that and you just kind of drag it back just to look at it, just to observe and see what's going on. It seems that there's a great deal of effort being made to essentially like keep it beneath. I kind of messed that up. Went a little bit too high. To essentially like keep it beneath this floor, right? We're trading like down bottom in this area beneath here. It does seem to me, again, that they've kind of split the difference, maybe because of, again, where we traded with Ape and AMC. They don't want to trade there again, which was actually this pocket. So they're just shifting it down like that 226%. And it's interesting, too, because I think that value, you keep saying it's interesting, Booksy. You're not convincing me. Just because you keep saying it's interesting doesn't mean it's interesting. I think it's interesting, but whatever. Some of you nerds are going to be like, yeah, man, it's awesome. I think that value essentially is the common like factor. I don't want to say it's like a factorial or something, but it seems to be like used as like the common factor between levels and floors on AMC as well, which is why I think they were able to pretty easily achieve that drop where they did. And maybe in some ways the valuation doesn't really represent what it needs to, and it is off. But I think that it's a pretty interesting idea that could actually just be like a really standard shelf level value, which means that is the bottom, you know, which you guys are like, well, that's good. But it means that essentially like if this were to go back down and it were to like trade low, I would not expect it to necessarily go down to some like astronomically low number, but rather that this is essentially like the new floor. It does give a lot of credibility, perhaps is the right word, to the idea that if this jumped back up and it drove the price back down, that we would see something like this to trade across the lower portion of this range, which we really haven't traded very much. And remember, this does the same thing in 2020 with that hook value. It's just that like what we're suggesting here is that this is essentially like doing it, but on the next level down. Like, so it's swinging through the new lows instead of swinging through these lows, it's swinging to the next set of lows, which is exactly what it looks like. So presumably, from a valuation standpoint, if this were to break above 590 something, even though I don't think it's very likely, I still think that 869 could happen pretty easily. I would even say that there's even credibility to the idea that it could go up to like 20 bucks, which I've not said before. I think there's an added credibility with the idea that this is actually valuation-wise going back for a gap fill. We wouldn't see it that way, except that we would. And this is another thing. You guys are like, God darn it, Booksy. Stop saying that. Here's another thing. Here's another thing. Here's another thing. This did come up when I was looking at it the other day. I was thinking about how that value, they left a gap there as well when they shifted, which I thought was really fascinating. Like, why do that? You know, it didn't need to happen. It just didn't. That doesn't mean it's going to happen. So I need you guys to understand that. But like, they didn't have to leave basically the same gap value, but they did. Like in terms of like position for the shift, it's in the right spot, which is really weird. So it's not impossible. It is possible, given everything that we understand about it right now, it is possible that this actually does go up to like 20 bucks if it breaks above 650, which is kind of crazy. As I was not of the mindset that made any sense and should happen or yada yada yada. Doesn't make sense. Does it make sense of the bigger arc that you've been talking about? No. If the arcs are the same, then it doesn't make sense. It just doesn't, right? But they may not be the same. And that's another thing that we're going to have to kind of like come to grips with is like there's different elements here that are not one-to-one. So like most of this is, but there's not a lot. There's a few things that are kind of like meh. And I've talked about that before because the nature of like the fact that I think we were, I would say supposed to, again, quote unquote, that's a big meh again. But I think the idea of us going above on the 13th made a lot of sense to me. I still couldn't quite figure out, other than going down for like a spring, why we wouldn't make a phase B top there. Well, it makes a lot more sense now, understanding where that valuation is, that we didn't want to go back above. They worked really hard to push it down to $5. And ultimately, like that was an approach upon the valuation threshold that would be breaking out here. And I don't think they necessarily wanted to do that at that time. They weren't ready yet. Why? Maybe because they thought that Adam Aaron was going to do some more dilution and they didn't want to take it up and get it diluted right away from that point. That's a good argument. You could also make an argument that there was never really a desire to take it up here for other reasons, like it was too soon. They didn't want to do an early cross up and just take it up because they were still going to accumulate more down low and they wanted to kick it back to the 4s. That would have been a good argument as well because technically they made a sign of weakness back here when they dipped below, right? And this is another one that kind of bugs me. This one goes real low. They made a sign of weakness back here when they dipped below on the 5th. They dipped below that trend as if they were going to later hook. Again, kind of predetermined that it may not go down or it may not go up. So it lacks that secondary upthrust that happened in 2020. That never occurred, right? We actually have a little bit more weakness in that we dove beneath that level. But I got to be honest, guys. I've never really been one to like. I've been like sitting here telling you for months that I don't think it's like January and that I don't think it made the right move above the top. That's true for this. But I've also been one to sit and say I don't think it's going to make a January run up. I think that aside from someone pointing at me and saying, Booksy, you're an idiot. You're just doing mental gymnastics. And therefore you're going to get screwed. Aside from someone making that argument, which I can't argue against that. If you've been listening to me ramble for the last like 45 minutes to an hour and a half or whatever, you probably already feel that way. You probably feel like, yeah, but you're kind of taking one thing and then going to the next thing, then going to the next thing. You're making these like long leaps, right, in logic. I don't see them that way. I see it as just like mathematical ideas that like this is where this is and yada, yada, yada. And the implications of it, much like we were talking about on GME a few minutes ago, like when you look at the big picture on GME and you look at the big picture on AMC, the implications of it change what you think might happen. So if you look at like the big picture and you think, well, if that's the case and it was ultimately trying to target this big move in January, it does look like a January move. It does not look like a June 2025 move. And so this idea that like we were not doing like this kind of one-to-one with what occurred here in 2020 may actually be wrong. Or the idea that we were going to slip really low may be kind of a self-fulfilling prophecy. What do you mean, Booksy? Remember how I said that I was concerned because it didn't go up high and it didn't go up high so it can't get down low. Therefore, we're still going to make that move or else blah, 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 blah. A lot of that was based on the idea that in order for this to work out, that we would have to come down and fill that gap. So the 869 value, which we've already shown in the last hour or so, is a really good mathematical number. While that value is true, and it is, that is like a halfway point, it is a very good number, okay? as a halfway point to get you back down. You could have pumped to that and then dumped through. That really comes from the argument that it was going to be more or less 1-to-1 with 2020. That's not true, wasted memories. And you know, wasted memories, speaking of wasted memories, I'm not here for you to like get a small snippet in 5 to 6 minutes. Like, this is not a vending machine. Like, you don't just click my buttons and I just vend out whatever you need. You had an opportunity that you wasted. Okay, so I don't really feel sorry for you if you come on and I've been talking about something in great detail for like an hour and you come on in 5 minutes and then say, oh, you ramble and nobody understands what you're saying and blah, blah, blah. I can criticize myself about that and I understand what I'm saying. But coming from you, it just sounds a little ridiculous. You were given an opportunity to get the 5-minute spiels on Discord and you ruined that opportunity. You refused to keep it about TA. You constantly went to bashing AMC, and that's why you were ultimately asked to leave, and you had to leave. You're the only person that I've ever banned from our Discord. I'm not trying to heap on shame, but what I'm saying is that like you had that opportunity to get like the 5-minute version from me when I'd post stuff on AMC on Discord. You had it. You let it go because you had no self-control. I warned you like 5 times privately. So don't publicly come out and say that I'm confusing and all this stuff because I'm not giving you what you want. That's selfish, and it's exactly the reason that you got kicked from our Discord group. Okay? All right, moving on. What that means is that I was using this as a measure for understanding how far you might come down, right, through that arc. If I take the same consideration presently, it makes it seem like we wouldn't have made the lows that we needed to make, but maybe we did. Meaning that, like, if you take this very literally, he's not in a timeout. He's out of the Discord group. Like, he got booted. He's the only one that I've ever booted, ever. And I spent way too long thinking about it. So for him to come on here and then start telling me that like I'm not giving him the information he wants is just silly. It's like the epitome of like a selfish attitude. And I think it's ridiculous. I don't have any time for that. I'm not here to like spoon feed babies when they ask to be fed. And if I take a minute to explain something, I take a freaking minute to explain something. You know? It takes me time. Some of these ideas are hard. I want to help people understand where I'm coming from. I'm giving you a bottom line that I think if it can break $6, which is still a big question mark, then you could come back up and you could maybe even hit like 20s, which before I had said no. And I was very straightforward about it. I did not believe it. I'm actually making a case right now, and I'm going to finish that case right now. And I'm not going to let somebody interrupt me again, so don't worry about that. But I'm going to finish this case right now. Okay? And I'm going to make sure that we understand what it is I'm talking about to the degree that we need to understand it. I was not happy with the idea that we didn't make an upthrust here for one basic reason. And it was partially because, yeah, I said I thought it might happen. That's a big part of it. The creek cross was another part that I thought, well, I don't know, maybe that's where it happens and you need to have a creek cross. But there was a specific thing that I looked at, which was the cross down, and it didn't happen. And I thought to myself, how are you going to get down to those lows? It doesn't seem reasonable. I start looking at something like what Stockfather's saying about LSPYs, things like that. And what I'm suggesting is, if I can get to it, is that perhaps the lackadaisical nature of that reaction that we didn't actually go up to 869 is indeed tied to the same concept that I've been talking about, which is that you did not actually want to advance too soon and break above here and jump the creek. I'm about to give you guys some serious freaking hopium, and you're going to be like, what the hell just happened? I'm cursing a lot because I'm like on fire right now. I need you guys to understand that this is what it sounds like, okay? It does sound like hopium. When this went up, I've talked about it kind of religiously over the last 6 months. It went back down and it fulfilled two things. Number one, it got to the lower half of the zone. It filled that gap. Number two, it was a 50-50 turn around the wave. You see that all the time in the stock market. You get a big push up, then you push back through like a macro wave, for example. In this case, the direction it's moving. You push back down through that wave, right? Equal parts, and then you get what I call a slingshot. Cool, cool. When this came back up, it actually came back up and retested, right, that wave, and then it fails, and it goes and it makes a new low. Sounds familiar, doesn't it? When Kumite. There's nothing to settle. It's already done. It's settled. He had an opportunity. He threw it away. He didn't care about it when it was there in front of him. He will do better next time, I'm sure. I do not have to babysit him and tell him what to do in his life. But I'm not going to sit here and say that I'm sorry for not giving him the information either. That's just dumb, right? What I'm saying is that if you look at the basic structure of this, I think it actually did the same thing. It dropped 50%, and then it comes back up. During the month of November, December, it checks that creek again. Notice that here we do have a liquidity cross. Now, I've been kind of bearish about it because it didn't hold certain levels that I wanted it to hold, obviously, and it just kind of looks bearish, right, when it doesn't hold those levels. It looks like if it drops through here, it's going to just bleed out. But that's the thing, is it hasn't dropped through there. And I looked at this and I thought to myself, when I'm doing all this valuation craziness, that I had made a case earlier that for us to come up to 869 was a similar check to this because of other parallels, that it was a liquidity test. It wasn't just that we were going up and getting down to that gap, which was necessary to get the gap, but it was also a liquidity test. Here's the hopium. This may actually indeed, despite being as crappy as it seems, this may actually indeed be very close to 1-to-1 with a potential January run-up, meaning that it actually did the same things. It just did it in a really compressed way, in a flat way. If you took this same motif and placed it over our current positioning, you'd probably be like, nah, I don't think so, Booksy. It doesn't really add up. But then you have to take a look at like what was going on proportionally during that time period. And if you look at what's going on proportionally during that time period, it actually does a pretty dang good job of adding up. You kind of have to take it with a grain of salt, as all things should be taken with a grain of salt, especially when you're driving fractals around. But the concept here was really simple. Like there was a low and then it reacts, it comes back down, it checks the middle of the range, which is what we're doing. We know it's the middle of the range for a number of reasons, but we also know, like locally, we also know like it is the bottom here. So to break out above what we're talking about is like the move right here, which is the move above like 520s, is super, super significant in the valuation model. It's not as significant in the chart, which is literal by itself. Okay. When I take a look at this, it's hard for me to like kind of ignore that that is indeed much the same. The problem is that I wasn't willing to think about it like as if, well, it is the same, but it's not, right? Like what if it took, you guys are like, well, that's dumb. What if it took a path that we didn't like, but it actually still obeys very similar rules? Is that possible? Yes. So what I'm saying is that essentially like what happened in the setup here is actually happening in the setup currently. I think the question mark is where does it maybe turn around? Now this, if you're going to go like 1-to-1 on me, Booksy, you got to have a better explanation than that, right? Well, ultimately, like this bled down from roughly December 14th through January 5th. Okay. Now, do I think, again, is 1-to-1? I don't know, man. That's a lot. It's a lot to say like, oh, it's 1-to-1. It's going to go do the same thing. But did it start a little early? Perhaps. You know, we're talking about December 6th here, not December 14th, for one. That time period couldn't be thought of as like exactly the same. That's not possible. December 14th doesn't even exist on this chart anyways. You can go to like Friday the 13th or whatever. But essentially it was like bleeding down until January 6th. So if I take the same time period here, I'm going to do December. It's not a really long period of time is what I'm trying to get across. It's like a really short window. So the actual downside, even though it's like super, super fast, it goes pretty far, right? It's really, really fast. So even though it goes really far, I said that backwards. Even though it goes really far, it actually is a really short amount of time. So this went from December 14th to January 4th. It's basically like 2 weeks, right? And some change. And that's as long as it took to get to a bottom, and then it reacts and goes back up. Ultimately, taking off from where this bottom was, and you know where that is in our current time frame. That's actually like at like that 415 area, which is kind of where we are right now, down to about $4. Okay. So did we get a 50-50 around the curve? Yes. Checkbox. We did get a 50-50 around the curve. It did happen. Did we come back up and retest near liquid center? Yeah. It did happen. We did. We had a dilution, which wasn't great, but then again, wasn't there a dilution in December of, was there not one in December of 2020? I recall there being one around that time period, right after the elections. Remember when AMC didn't take off in 2020? And the rest of the market was like going up, making new highs, and AMC's just chilling, doing nothing? I'm saying right now is that I think my assumption about this going to 869 is based predominantly, like mostly, on the idea that it's going to go get a gap fill. But if it doesn't go get a gap fill, then in reality, there's no reason to think that this stops at 869. And even though it's not quite 1-to-1, and I do think that's an issue, I'm not saying it's not an issue, timing-wise, it's kind of an odd question mark in my brain. Like, if it's not 1-to-1, how do you know when this ends and blah, 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 blah. Even though it's not 1-to-1, it seems like there's a very real open door possibility here that if this jumped above 6, that it could go all the way to 20. Now, we can explore that all you guys want today if you want, or we can just kind of leave it at that as a possibility. Well, if this goes to 20, GME is definitely going to go up to $1 bajillion or whatever, make a bunch of money. Maybe. You know, the complicated nature of it is that it's not really the same for these charts. Like, yes, the implication would be that, hey, we just talked about this on GME. You said there's a possibility it comes down low. Yeah, it's a real possibility. All the same, if it gets above here and it holds, that's a real possibility it just goes, right? Like really far. And I think that's the same thing for AMC. It's the same kind of It honestly is. It's like the same kind of importance on the level, I suppose. Like the importance of AMC in my mind now of getting up above this mark here, liquidity wise, like valuation wise, down here at 6. The importance of that is of equal importance to GME getting up here above 50. So the idea of it going to 6, which is the same level as the June 3rd level for GME, okay? That's the same mark as the June level on GME, which is the $50 mark. Do you see where I'm going with this? Like, it's the same. They both hold super significant importance to the future of these stocks going into the new year. Both of them do. And both of them implied in these setups, both of them have a very strong inclination towards going up to making a new high if they can break above 50 and $6 respectively. So then what the heck is this? Again, it means that like that 415 area that we've been looking at was the floor, and then the 403 ultimately ends up being the phase B bottom, and this ends up being a big spring jump. Why it didn't seem likely to me is still the same. And this is the weirdest part about this, is like I kind of looked at it and I was like, you know, that's a lot. I'm gonna have to explain a lot to a lot of people. At the end of the day, it's easier just to say it has to get way up here. That's so far away. Like it can't be that difficult, right? Like, but it is. Like it is that difficult. You know, it would need to be that difficult in order for us to really make that advancement. There's still a danger at 860s. I don't think this area is just a gimme. I don't necessarily think it is just, oh, you're gonna go there and it's gonna be done. In theory, you could look back on this and say, look, man, I agree with all that, but I think I like your 869 better. And if your 869 is correct, then you really are just looking at like this kind of 50-50 up to like 869 or whatever around the top, which again, totally makes sense. And then if you go to the bigger picture, you're like, so you're basically what you're trying to say is that you think this could go do another 50-50 all the way up to $20. And what I'm saying is that, yes. I previously denounced that idea because it didn't make sense with the valuation of AMC as it was or where it would necessarily go. It does, however, make perfect sense if you look at the original valuation versus the gap fill. If you do all the stuff we just talked about for like an hour and a half, okay, it actually makes perfect sense. And it is a breakout of the creeks, both of them. What's even more incredible about this is the nature of that move, though it may not be as big as the move in like January of 2021, the nature of that move could lead to a very similar outcome. Like, I didn't want to believe, and part of me didn't want to believe that it was going to be that easy, like it would be the exact same as that setup. But when you go and you look at this overall, it is very, very similar, right? Very, very similar to what we see in 2021. And it does kind of boil down to a possible January and then June move. The June move was something that I've been talking about for a while. I kind of felt like that was likely. There's a lot of possibility there based on other things, other trajectories. What did that do if you take away that shift value, Booksy? Well, here's something that I'm not really sure about, okay? Because in the end, while I do think that's likely, and it is possible, when we go back and we look at the big picture, it's like, I could take this into consideration and say, all right, I think it can go to $20 and then basically build out again and do a June move up to 80. Well, that's not that different than what you talked about, Booksy. You talked about 80 for a while, so you'd still be right about that, I guess. But what's weird is like, if you take that valuation and you put it back kind of where it belongs, that would have to make sense. I don't think it's like, this is one of those things where I'm like, I'm not really sure that it matters because an up is an up, But it is important to note that that does go back and test, and I wasn't just going to like throw this at you last minute, but that does go back and test these original highs. And the idea would be that you're going back up to, again, remove the chart shift for just a second so you could see better. Like that would be where it would go. You guys are like, that's like 190. Yeah, but that's without valuation change. Do you see where that goes though? That basically goes back up to this bottom, which is a really important mark. So had like we not made the moves that we made, it'd be like us going from, again, like roughly slightly below the floor from 2020 all the way up to back to like 214. Does that make sense, Buxy, at all? Yeah, because that's a really important historic level. I mean, for supply, it makes perfect sense. Does it make sense for other reasons? Are there like trajectories there? You guys are going to get pissed off at me a little bit, but I don't know how to fix this problem. So this is, you guys are already pissed off. This is June 4th, okay? You're going to get annoyed because you're going to be like, well, wait a minute. You said that like a long time ago, and then you said it didn't matter anymore. Because I didn't think it mattered anymore, okay? I didn't know how to reconcile that with what we have, all right? When you go to the 5th and you go back to the original run here, I don't want to get too crazy like in detail about it. There's two markers here that when we did waveform analysis back in the day, we kind of looked at these two because we were talking about waves up and waves down. Now, I would not say it goes there. It doesn't make any sense because you're like, why the heck would it go all the way back up there? Instead, what I said is, again, that shift value, it's really interesting. That shift value actually leads you to the more or less like that LPS level. This is what I've been talking about. So instead of going up to the top, you're only going up to basically like this peak around the 70s and 80s, which is this LPS level. So the shift was successfully like dropped. And I'm like, oh, actually that makes sense because when I first worked on, and look at where it is, right? You guys are like, what? The angle changed. The angle changed. I hate this about myself right now because I'm like, I wish I could go back in time and tell past Booksy very simply that you need to determine what the shift value is and look at the original ideas that you had and then determine how you shift them down. This is almost too simple, right? So it hurts my mind. When you look at that value and you're like, oh, it goes up to like 80. Cool, that's cool, Booksy. I'd take 80 and get out of this stock or whatever you guys want to take. And you're like, oh, so it could do it much like the other one where you have kind of a June or a January and a June move. You really think it's going to be that simple? I don't know, maybe, you know. Oh, they're parallels. It works really well because it hit the bottom and then it walks up and then it goes up here and it's parallel and yada, yada, yada. And probably by February 2026, that value that you had is like actually breaking down or something like that, you know, like that's the peak value you got before. All of that would be like sensible to us. We would say, sure, maybe, you know, and you've looked at those waves before. But what I didn't calculate was the shift value from here to here, and therefore my confusion was in that this is not a reliable target breaker. So you're like, I'm not angry, Booksy. Why did you think I was going to get angry? So I had been trying to use the trajectories as they were pre-shift to determine where we're going to be after shift with evaluation, but that can't be done because at the end of the day, there's no information here to go off of. Like you're using old information to get a new target. It's not completely wrong. It's just not completely right either. Like the idea of it being 2026 was based on a waveform analysis here to here that's based on old trajectory, but I only really could use timing and intersection. Timing and intersection. So like you can't use necessarily these blue trajectories that I just drew because it doesn't make sense. But you can use, well, it crossed the middle over here. You know it did. So then you could use timing and you could use the intersection here of that big wave down. I don't think that's wrong, but that's how I got the 2026. It's not wrong. I don't want to say that because I don't think it's wrong. I genuinely don't. But I do think it's a little bit misinformed because it did not take into consideration that the original target may have been around that $21 area that I had found like a long time ago, and I kind of like left it alone as if it wasn't going to happen. And it's not $21 anymore, or $32 rather. Is that what I meant to say? That there was going to be a time when we came back up. That wave existed here like a long time ago. Like this is not even like remotely funny at all. I'm not laughing about it now, and I'm not making a joke. Like I'm not saying like, oh, I was right all along. That is not what I'm saying. What I'm saying is that was a target that I left behind for a lot of reasons because I did not think we were going to achieve that target, but it's because it's based on the old chart. I didn't think that was the same as the shift value. It's the same value. Like it's the same as the shift value. That's the shift down. So just like you would shift down here, the chart, you're shifting down here, the ultimate trajectory. It's no longer hitting this top, it's hitting this top. Why are you frustrated by that if that's the case? Who cares? Because when you do analysis, okay, you can use the cat ears. All right. Now, some of you are like, at this point, you're like, I'm so lost. I don't really care about this anymore. I will make it like as painfully simple as I possibly can. When I had when I was originally looking at this, again, I had kind of used this as like an S curve, but we went too low. It's like it goes way too far down, right? Again, shift value is like messed up. When you add the shift back to where it should be, it actually works really, really well. Like it's exactly where it should be, so on and so forth. That would be like the equivalent of on an upward wave, okay? So ignoring this bottom part, that'd be like the equivalent of us saying that when a wave comes down, when it comes back up, you can look at the cross section, right, and determine where it's going to go later. We do this all the time. All the time. But you don't have a measurement that makes sense. Instead, you have this really long measurement, and you're like, well, this doesn't really add up because it's too low or whatever. And it gives you like a different value that doesn't really make sense. The other thing is that usually, though not always, usually during the breakdown, you have those cat ears, and usually that is a good indication. They may be really flat, they may be really sideways, but usually that's a really good indication of where you're going to go later. Prove it. Okay, I'll prove it. I'm going to give you one example. There's dozens, but I'm going to prove it with one example, okay? That if you use the middle of the cat ears here, like the center point between the cat ears, you would have gotten a really good indication based on this drop down, right, of where this is going to go. This is the center point of the cat ears, as it were. Okay, you could use that. You could use this. And it's a pretty good projection of where you're going to go later on this wave back up. It's kind of like, oh, it's sort of middle of the road. Yeah. If you use the midpoint, it doesn't yield the same results, but it's also, again, projection. It does not work to the upside this way. That's like way off, right? So it just doesn't work. If you use just the lower or the upper cat ears, it's like, well, there's a lot there, Booksy. You'd have to kind of like pick and choose, you know, don't you? Yes and no. Like, notice that as I did it, it essentially just gives me like a perfect bracket for where this is going to be. That's not an accident. You know, this is another one of those places I come back to a lot because I got it right. That's the wave. That's just wave theory. Like that's the idea of trajectory with sine wave. It's not that complex. This is moving along a bigger wave, right? Which is the S curve. But ultimately, like that's the motion that's being accomplished. And that's the structure that I looked for. And that's all there is to it. It's super simple. Why then could you not do the exact same thing here? to determine where that is going to lie. Well, I'll tell you why. Yeah, you guys remember the master chart. That was the one that said we were going to go back up to that level. Maize and Blue 2, you just made my day. That's exactly right. You remember, you remember the master chart? The master chart said we were going to come back to that level. And I was like, that's a bad chart. I'm going to leave it alone. That's exactly right. That is the chart. I mean, that's where it started. It was like mother of all charts, master chart. I called it like a bunch of stupid things, okay? The idea was that the middle of this was be like the middle of an S curve, kind of like what we're talking about on a current time frame. Does this look wrong now? Yeah, it looks wrong. That is where the middle is though, right? I mean, it is. If you draw this as a full S curve, not from the breakdown, but from the top, like that is the middle. I don't think there's any doubt in my mind that's the middle. So why did it not like stop here? Why did it go so far beyond? You know, I think that the real question is, when we look at this from the point of view of a chart shift, the answer is there. It's already presented itself to us. That is the chart shift. There is a floor here. And it does exist. So you didn't use it though, Booksy. No, not really. And I think at the end of the day, I don't know if I could have used it. I think it would have been really, really challenging. Like, I think it would have been very difficult for me to find the right numbers, but I had attempted it before. I had attempted this a few times where I was trying to identify, like, where would you go, right? And how would you get there if this went through like the middle of these cat ears? Because I knew this was the cat ear. There was no question in my mind about where this was. Like, I knew where it was. Like we had already identified it long before anything happened. What we were hoping for here was that it was going to go back up. Like, that was the middle of the cat ear conundrum, right? It's the same conundrum that we talk about during, like, we call it the stiletto move. You know, when it drops and you're like, oh, it's a shallow S curve. Well, yeah, I mean, there's a cat ear right there all the time. The problem is, like, what happens now, right? If the cat ear can manage to jump the creek, it reverses. This is why we call it like a shallow S curve instead of calling it the full S curve. You get where that comes from now? You're like, nope. Every time there's an M, there's a possibility for either an S curve, we've talked about this, that continues, or a possibility for an S curve that goes and turns back around. This is the exact same thing when you flip the chart. Like, it's no different just because it's going down. So when this came down and it did the cat ears, the question was, is it going to be a cat ears that ultimately jumps a creek and then reverses, or is it going to be a cat ears that ultimately turns into an S curve? So back in that time, I did all these crazy things and I was looking at iterations and stuff. And what I determined is I thought it was going to turn around, right? Because it was making certain moves right here. It did jump the creek, but it didn't hold it. This is why Stockfather and I were both kind of pissed off in some different ways. When it did that massive push-up, what happened is it went up and it hit that trend and then it reversed down. And what Stockfather said to me was that he said it looked like somebody changed their mind. And at the time, I was like, meh, I don't know if I believe in that. Like, maybe they already had in mind that they were going to distribute. But that Judge Zern decision happened. They pushed right up to that mid-marker and then just dropped it. But before that had happened, we were making the right advancements. Like, we had jumped over that creek. Like, it was there. It had happened. Like, that is a jump over a creek right there. Like, it looked like it was making the right move on that cat ear to jump over the creek. This is what ticks me off so much looking back on it, because I'm like, yeah, I mean, it made the move. It just didn't hold it. Then all of a sudden it like reversed. It goes, pumps really high, hits that marker, and reverses the other direction. I know it's history now. I know that you guys are like, well, that doesn't help us. But it kind of does. Because now when you look at this and you take into consideration that we did have a chart shift, we did have a drop, we did all this other stuff, the same kind of means are happening right now. Like the same kind of ideas, arguably, I hit the wrong button, although that might be a good thing to explore. The same ideas are kind of still there. They're just not in the right place. Like it's shifted down. So like the concept here was that if this were to jump the creek, you would have presumably come back above here, right? And then headed back towards the top. We know that didn't happen. Long story short, right? Done. Didn't happen. No bounce, nothing. Okay? We may have even said at the time that perhaps it would have held like this guy right there. Like, again, it looked like it was going to do it. It made an advancement. Then it came back beneath and dropped it. It was all kinds of problematic right when that judge-earned decision happened. From a technical standpoint, it flip-flopped really bad. So I just kind of left it alone. I didn't ever look back over my shoulder. And now I'm like, why did I do that? If I had looked back and considered, if I just looked back and considered this, I would have considered the fact that this may indeed have a June run-up. Like, do you see how simple that was for me to do? That was super simple. Like all I did was I drew an S-curve with the appropriate middle where the cat ears are. I drew an S-curve. I drew an intersection from the bottom through the S-curve, and then I used it with the level trajectory that I thought it was going to hit. And that gives you a June 2025 markup to 196. That would have been presumptively, you know, I mean, you can't say everything, you don't know it's going to happen necessarily, but even if it had dropped, and it did, right? We know it did. If it had dropped down and finished that S-curve, my genuine like thought would have been that it should come back up here. It's essentially like a reverse. Do you see like the problem with my like the reason that I'm like partially why I'm like so frustrated is like that is a really simple turn. And that would have been the expectation. Like, even if it seemed unreasonable to a lot of people, that would have been the triangulation for potentially where that drop goes. How would it have gotten there? I don't know for sure that it would have looked the same, but I would have probably placed this here and just said, I think it's going to do pretty much the same thing. And again, at that time, we would have expected it to go lower. And this is, remember when I said I thought it was going to come to like $1 or something, or sub $1? This is really close valuation to where that valuation chart is right now, right on the anchor here. So it's weird because I remember even at this time thinking that S-curve was going to go super low. And I was like, how could it go that low? It's too low, blah, 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 blah. You know, like, it can't go that low. It's too far, yada, yada, yada. Okay. Because I remember thinking like it was not going to go back below this floor again. Like at that time, I was still hopeful it was going to break out. So I had kind of like already in my brain kind of shipped it out. Like it wasn't going to go there. You know, it's not going to go there. That kind of thing. And I'm looking back and I'm like, this is so simple, but I just left it behind because I didn't think that they would keep the same chart. Like that institutions would drive the exact same chart forward. Didn't make sense to me. How could you do that? You can't measure it if you don't know the shift value. But all of a sudden it's like, I'm sitting here like, that, that is the same move. It's just happening slightly below. And if it makes the advancement to where it needs to make the advancement to, it basically becomes like the exact same move. Like the 44 where that intersection is in January, essentially it is the exact same. Like it really is. It then turns into a reaccumulation or whatever here, and then it could go up again in June. And it's essentially 1-to-1. What's frustrating to me looking at that is I'm like, yeah, I guess if I had presented it that way, again, here's that level right there where it took off in January. If I had presented it that way to begin with, I think a lot of people would be looking at it like, yeah, it makes sense. But I didn't know what that value was here. I mean, it does. It makes sense because you're basically just, we talk about these cliffs all the time. Like, you should come back up and check that cliff. Like, that's totally normal. Like, it's totally normal, and it happens all the time. We drop off like that on an S curve. You're almost always going to like build out towards that end. And then the expectation that you could come up in a triangulation and break out isn't even that weird. Like, it's totally normal. If I take away the other parts, it doesn't quite look right. But it's just a gigantic like creek jump, you know? Like, it's not. And even like here, I'm like just sitting here like kicking myself, like, yeah, it just looks like a creek jump. Like, that's where the intersection should be. It should jump. So the problem isn't that. It's that the shift happened. And when that happened, and this is an interesting point as well, is like, take a load of this. I'm almost positive this is going to work. I haven't tried it. But I'm almost positive this is going to work because it should work if I did the math right and all that junk. When you take the shift value, I'm almost positive this is going to be like an accurate depiction of like where that floor is. There it is. Do you see that? Like, that's not a coincidence that the floor is there. If that were indeed the case, that the goal here was to get back to 45 by like January, and they were doing like pretty much like a year-long cycle, right? Notice like how simple it becomes, because then the rest of it just kind of falls into place. This then becomes like a long-term uptrend. This is exactly where it should be, like exactly where it should be, right there on the intersection. It's even already obeying like the same rules. Like, it's got the same markers here that were hit. Like, it already existed. It already checked this line like multiple times because the line existed back here. It wasn't like, this wasn't make-believe. It was just there. You know, it was the breakout line. We were already there. Look at where that is in relationship to where this intersection is. And tell me, what are you doing, Beazle? My cat's like upside down on my lap right now. I love you, Beazle. You are very fuzzy and fun when you sit nice, but you're not sitting nice. Cats are crazy. Beazle's my long-haired male cat. He's kind of adultish. He didn't eat a lot as a baby. He was always the last one to get to his mom, and I think psychologically it like burned into his head that he needs to eat a lot, because now he just eats a lot. It's like, so he's really big. Hey, get down. We're putting him on a diet, but it's hard to diet cats because they get really annoyed when they're hungry. And he's hungry right now, so he keeps jumping in my lap. No. So like this whole model here, I had just kind of thrown it away, but it's there. And it fits like a glove. Like, look at that, man. That's perfect. Scarcity issues. It's weird because like the first to the milk was our other cat, Imogen, and she's like super like territorial, and she's like super entitled. Like, she wants pets when she wants pets, kind of thing. I think because she just kind of always got what she wanted. It's weird. I know it's weird to say that. I'm not sure if the temperament led to the behavior or the behavior led to the temperament, or both. Nature versus nurture, or whatever that argument. But then you can see the difference in my other cat, who now is like big. So he's got all kinds of like, he's like a big cat with small self-esteem. And she's like a little cat with huge self-esteem. And it all started when they were like tiny kittens. I could see it. The writing was on the wall. So yeah, this setup, I think this setup was misleading because there was an idea that this was going to go low again and check these bottoms because of the similarities. They're still there. It's not something I'm just going to like throw out the window and be like, it's not there anymore. But this overall shift, this would have been the way that I understood the market moves that were to come in the future. Like, I would have looked at this back then. If we had never made that shift on the chart, this is exactly what it would have looked like. And so what's crazy is like I'm like here, I'm sitting here like talking to you guys about it, like it makes sense to me. I know it's not like the perfect. Here, I'll do this. I'll try to make it a little bit easier to see visually if I can do it. I'm going to take this post shift value and just kind of add it here. Bars patterns are tricky because they kind of like lose information sometimes, but I think I changed mine so that I wouldn't lose information, or at least some information, so that I can have this closed off. Give them catnip. That'll mellow them out. Yeah, so like this is the way I would have seen the chart. It's essentially like perfect. And I know that it's kind of bonkers to say that now, and you're like, well, that's maybe true. Maybe it was perfect, Booksy, but it's not anymore. You know, you can't. Oh, there's Tesla just rocketing to the moon. Jeez Louise, they're still going. I think Tesla could go to 1,000 easy. This is going, man. I think a lot of what we talked about today, oh man, this chart's like frozen. There we go. A lot of what we talked about today seems like really theoretical, but it's not really. Like when you start charting with the chart shift, a lot of the things that didn't really make sense suddenly like really make sense. Like why do we stop where we stopped here? That's really weird, right? That weird number of like 5 somethings, that doesn't make sense. You guys are like, well, yeah, but it was, you know, dilution points and all this other stuff, auto dilution. I know that, but it's like, why that number is weird. It's a weird number, you know, it just is. And there's other things like that locally, like why did we then make, you know, a drop where we did? There wasn't really any major reason for it other than it just did. We were using the local chart as best we could to understand something that ultimately is kind of being defined by like a different value, and it really has to do with this creek here that we kind of stopped where we did, right? It wicked up to that creek and then it dropped through, and if it can make the leap above, it's super high, and then you're like, that doesn't make sense. There's not really a place in Wyckoff for like this kind of a high move that goes all the way to the top, then go all the way back through the bottom, and then go all the way back into an SOS. It just doesn't make sense. But it does if you think about the chart shift. Okay, well then how does this relate to the same things we've been talking about with the chart shift? Well, without going like crazy, I've already gone crazy enough today. I think I've done enough crazy for one day, right? I would suggest to you that the same kind of motion here could be at play if it breaks back above the 6s. And we talked about this before multiple times already, that it could go up to like $20. When you take these things and you shift them down, they become like, they don't seem as relevant, I guess, because of the nature of like where this stuff is happening. But it is still really important to note, like those trajectories and I would say the parallels is what we would call them, are still significantly like the same. So like, even though I'm kind of like fudging the shift right now, I'm kind of slowly moving all my stuff down. Even though a lot of that stuff may seem like a little bit more irrelevant, like why would it's not the same level, like that shift still again exists. It's just that what happened as a result, I suppose the best way to describe it is that it pitched everything down as a result. So when you take that into consideration and you drive all this stuff backwards, a lot of this stuff won't add up anymore, obviously. You're like, well, yeah, that doesn't add up anymore. No, it doesn't. This one especially is near impossible, I think, to get right. You know, there's a lot of issues, I suppose, with shifting this down in a way that it just doesn't really like quite work, right? Like everything looks like slightly different, slightly off. But that's where the beauty of like the chart comes in, because we don't have to do the work for them. Like basically they already did the work of shifting the chart. So like that's the chart as it's shifted in relationship to like where we are presently, right? Now that looks like 96, but I'm going to make again, I'm going to kind of make another case here that like this is still at play, but they did a shift with these lines as well. So instead of just doing that, instead what was done is that there's a, and it's easier to do off this bottom than anywhere else, right here. They actually used like an existing line, so they pitched it up, and it just so happens they used the existing original value of the chart. So this was pitched, I don't know where to put this, I'll just do red. So this, instead of being like where it is, I guess, I don't know a better way to put this. Like the pitch is the drive like down and away from, I'm trying to think of where I should put this. I suppose I wouldn't put it there. I would put it has to be the same value, like here. Yeah. Do you see how like, even though the whole chart shifted around, that none of this stuff doesn't line up? Like it still makes sense. Like it still lines up where there's a sensibility to it, is I guess what I'm saying. There's still logic to it. Like it's not completely off the wall out of nowhere. Like the shift itself does seem a little odd, but then look at where this lies, you know, on the greater picture. When we look back at what happened in 2000 and on this build out with the 50-50, right? Here it is right on the top where it should be. It's like right where it should be. So even though the target was shifted down, they're using like an existing creek line anyways, which is really fascinating to me. So like you take the shift into consideration, it doesn't break anything, but it does indicate that like the practiced method of going through here and looking at that individually should line up, and it does. If it didn't line up, I wouldn't be talking about it today. Like I wouldn't even bothered. I would have been like, yeah, this is a waste of time. But it does. How could they have done this, Booksy? Don't know. I genuinely don't think a human being, I mean, I know people are good at math, don't get me wrong, like some people are really good at math, but like I genuinely don't know how some of these lines, like they already kind of existed, you know. It's really weird. And I think the reason behind it is quite simple. I think, again, when they did the shift, they just used markers that were already there. I don't think it was as complicated maybe as generating like brand new points of interest or this or that. I think it was pretty straightforward, you know. Like they already kind of had those markers on the charts for certain trajectories, so they just went and shifted it all down. It's like an alternative path. Like you have a singular path, and then you can take that and make it, I guess, I don't know, maybe it's just about projection, you know, like if at any given point, maybe a pitch fan would be a good way to do it. It's probably the best way to do it anyways. And maybe it, you know, in the end, maybe it doesn't matter that much, but like it matters to me to think about it anyways. Where is the pitch fan? Pitchfork. Yeah, maybe in some ways like this already existed because there's multiple possible outcomes for a path, right? So like you can take this same thing and like draw it like at different pitches. So like these pitches existed, you know, and like you can take the same structure. I don't think it's that off. I made it look really off. But you could take like the same structure and build it out on either one. If you were coming down, you could build it out on the middle, start on one, and then end up, oh, later we're going to shift down and go to the next. You know what I mean? And ultimately, like those goals or those maybe that's not the best way to describe it because it's really like multiple channels, but those would be potentially used. You know? So maybe the best way to describe it would be that like there's a pitch here that's being used and implemented right there. Probably based on, again, that parallel. And then there's another one that may have been, again, used earlier that just was not finished. Like they just kind of abandoned it. Maybe this one. I don't know. It's hard to say. Like, where did it come from? I'm not sure. It goes pretty far up. I mean, when we did the first one, it would have been out here. Actually, that's pretty close. Yeah. So maybe this triangular structure provided a basis for like pitches that may be used. I see it here, but I don't, at the same time, like I don't see it there, so I'm not sure. Maybe if we use the same one instead of trying to do two different ones. I mean, to me, it looks like a trajectory from kind of like the original downtrend, I guess. Oh, there it is. There it is. So it's the original two bottoms here and here. So there was two pitches. One is really steep, and it's more about the creek jump. And then the other is a lot less steep. So two competing pitches, this pitch and this pitch. These are the ones right there, this one and this one, that are used. Yeah, I suppose, again, I think it just makes sense. They're probably just existing trends, like possible trend possibilities. This was the original one right here. That would have been used. We already have that on the chart. You guys are like, well, why didn't you just copy and paste the ones on the chart, Booksy? Because I wanted to see where it came from, you know, like beyond just my own like notion about it. Kind of wanted to see how that worked, but I guess I could have just copied them. Yeah, this is an existing one. It has hits here on the tops and the bottoms. It's pretty strong. This is a really strong one, and actually this is the one that was employed, I would say, until the end, till the shift. And then once the shift happened, they just stopped using it. And everything that would have been like proportionally on that value is now on this value because, again, valuation change caused that shift to occur. So they just picked up a different whatever. If you want the shift chart, it's pretty easy. Somebody's asking about it. Just go up here and type in AMC times 2.2636. So you can go up here to the add button, compare add symbol. You can do whatever you want. You could do AMC divided by 20 or whatever you want to do. We tried, I guess, a couple different things. We found two values, but one, the 2326 is the one that I think is correct. It requires a bit of thought, you know. It's a mathematical thing, so if you're not really interested in it, and I wouldn't hurt yourself over it. That's not a dig at anybody. I'm just saying, like, it's not really necessary if you want to just chart what's already there. You just have to use the right lines. But it is something that I think is worth the time, which is why I took some time on it today. As I posted it and I realized that like a lot of people are going to look at that and just be like, where did that come from? And I don't think I can answer that question very easily. You know, where did that come from? Like, it came from a lot of things. I mean, there's a lot to it. The day that we did it, we built out a long time. It took us a long time to kind of get there, but we did it. I don't know, man. Even if it's like slightly off, I think that this is correct. So the hopium in all of this is without the chart shift and all that jazz, because it works, it's there. The hopium built into this is that ultimately leads to the same outcome. It's just lower, and that's a really positive sign. So I had gotten to the point where I was kind of giving up on any idea that this would ever go back up like the way that it did, at least until next summer. But I think this is still a very like real possibility here. Very real possibility. See, I was wondering about that. It looked a little bit high to me, but like it was slightly off. Should have been like closer to 80 something, not 90 something. There it is. It's a little bit off. It seemed a little bit high. So this is an if-then statement, right? If we get above, if something happens going into January and we get back above $6, there's a strong chance, I think, that this plays out like a gap fill, followed by a reaccumulation, followed by a like a breakout going into June or thereabouts. There's also a possibility in anything that, you know, I'm wrong. This actually kind of looks more like late June or July if you use that trajectory, which I did not use at first. So let's keep that in mind. But it's roughly like this area in June regardless. So it gives you a lot of time to kind of think about it. And I mean, at this point, if it's already up here, I don't think a lot of people are going to be like questioning that it could happen. I don't think there's much question about it if it comes up here. When you talk about going from like $20, max pain for January 17th is $6, right? Which is high. In theory, if you look at January, the way this built out, it goes up starting more like mid-January. It doesn't really break out till later. If we look at, again, where those intersections are, the breakout point here is on January 22nd. So if somebody were looking at this saying that they thought it was going to go up in January, you'd still have to say like most of that move happened at the end of January. So getting like monthlies or something probably would screw you over. That's what I would expect. It's like you kind of get messed up if it happened that way. So if it's, again, 1-to-1, which I don't necessarily think it is, it seems a little early. The question is it early because of that drop of news, or is it just early because it's just moving a little faster? You know, if it's early just because of the drop of news, it could still take as long to build a bottom. If it's early just because it's faster, then you can shift everything forward a bit. It's a 2-week window, roughly. Again, December, if you want to get really technical, that's just the bottom, right? If you really talk about like the breakout point, it's a big window. I mean, it's almost a month. It's a long time. It's like 20 plus days. I don't necessarily think that's the case. it might be better to consider instead other methods of timing. If we think that a January move is even possible, then you could consider other methods of timing it out, maybe than just trying to do a direct comparison, which doesn't seem super helpful. So this would be like January 15th. It's kind of what I drew. Yeah, that's about right. That's $6. No. We already went up before coming down, is what I'm saying. I think if we go up here, it could very well be, if it blasts through 8 and goes to 20, I think it's done. I think it's just going. We already went up and then came down, is what I'm trying to say. Like, the up and down moves are not, they seem like they're not there, but they're just not as extreme. It still made the wave down 50-50, just like this did 50-50. It still came back up and checked the wave. That's the part that I think maybe you're missing. Like, it still did this drop and then recovery. It did the same thing right here. Drop and then recovery. It's already made the move that it was going to make. It never made a phase B top. Like, that idea of going up to 13s originally was the phase B top idea. That didn't happen. It just didn't break out. And I've just spent, like I said, I spent hours just now talking about why I think that might be the case, due to valuation concerns of where this actually is, which is breaking out of a major long-term creek. That's where it actually is. Like, it is. And I think when you look back at the valuation chart, it may seem a little bit out there, but it's not. It's a simple enough idea that there was already like a preconceived idea of like where you would maybe take the chart, and all it was done was like shifted down. This is it. This is the move that's pushing against the breakout. And had we gone up, pretty sure we could have made another high. We would have just been retesting the creek. A lot of the reason why I thought that we were going to go up again is because we didn't make it to the creek. You guys remember me making that argument multiple times. I said we didn't make it to the creek here. But that's not true. Not true. We did. We made it to the creek and we actually went past it. It's right here. If you do the shift in reverse and you take, this is where that imaginary line is, right? It's not imaginary, but that's where the line is, and you take it and you do the valuation shift of that line. That line is actually right here. This would constitute a creek break. So the logic and the thinking to some degree was that we weren't going to make that jump because we were going to make that push up to 8s because it intersects like that really critical creek level, but we don't need it. Like, we don't need to do that. So then the rest of it is just looking at what are the interactions going on right now. This is where the rubber meets the road, folks, like right here. Like, this is the kind of right where that gap is, slightly down to where that reaction is. That's really where we're meeting our kind of bread and butter. So this pullback that you're seeing right now is a wave cross check. Like, we went through this wave, we did not advance, we went through that. That's 50%, or whatever we want to call it, okay, on the big wave. Then we went through another wave cross. We crossed this guy here and went down. But this parallel doesn't feel as strong in this particular time frame. And it isn't. But it's the same exact kind of idea as right here. This makes a 50% cross up, and then it crosses up and crosses down. And this is the ultimate wave cross right there. There's the 50% cross right here. Do you see how this matter, like why this matters then to understand like that if that's true, that could actually be the bottom, like the bottom. And this also did not ever reach that. It just didn't. It looked like it was setting up the same way, but it didn't. It didn't reach the gap, but it didn't really have to here. It hits the bottom, it does reach the gap, but ultimately it's going back to test what's considered to be the floor. If this can manage to hold, and it's a big if, because we already know the bear case, we went through the bear case the other day. The bear case is strong. It's silly to think that it's not strong. But if this can manage to hold on to that floor at $4, and especially if it holds $4.15, which I think is really, really important, I think it's going to just take off. Like I think it genuinely could just go. Like it's a lot of like levels here to like look at. Obviously there's places it could stop, yada yada yada. But this is the big like sell test, and it is a big test. Look at the selling volume here compared to everywhere else on this chart. Go back to 2020 and look at the selling volume on that sell down after it went up and reacted in December. Look at all that selling volume right here. Like this is the big sell test to try to drive the price back down. You see that? That's a big deal. Once this hit a RSI, it had a, pretty long standing, on big picture anyways, it had a pretty long standing, this is daily, divergence as we call it, like a bullish divergence, on the daily RSI, right? I think yesterday we had talked about, and the MACD looked kind of like garbage too. It was already dropping, but it had also had that divergence. Yesterday, someone said there's no bull case, and I said, well, there is some because you had some divergences. I'm going to get rid of the implied volatility thing here. I'm going to add OBV because the on-balance volume is very interesting in 2020. There's a hike in on-balance volume even though this is going down quite a ways. This actually rises above previous highs and then it drops really low for taking off. All right. We can compare that same picture here, and I'll do the side by side if we need to later, but I'll just add the so I can share it with the Discord group later. I'm going to add that. And go to the present time frame. And let's take a look. It's going to be different for on-balance volume. Is there a bullish divergence on RSI right now? Yes, there is. Right there. Is there a hike in on-balance volume? I don't know. I have to figure it out. Followed by a sharp drop? Yes, there is. Is it higher than it was on the downside? Yep. And then is it followed by a massive drop? Yes. It's the same. I was trying to say this on MPW as well. It's doing the same thing. It's like building out. It's just slightly different because of the mess of it, but it's building out like a super long term. Like now this divergence goes all the way back to July, which is like, it's going to be like 6 months or whatever, 5 or 6 months going into January of RSI divergence on that bottom. I think I was like, I don't get it, man. It looks like it's ready to just explode. It looks like it needs to go to 533 and then possibly it's going to race up. I'm wondering at this point if things do take longer than expected if it doesn't get there. But I had already kind of measured it out, and I was like, where would this possibly come from on MPW? Like, it's just kind of a crazy out there idea. And then it never went down low. It just looks like it hasn't finished the structure yet. I'm like, it just kind of looks like it didn't finish it. Well, it does, and I'm not going to lie. MPW is obviously different than AMC. It's not the same, but it's weird how this has been building out on that divergence for a while, and now AMC playing kind of catch up here is doing the same thing. I think what maybe is like kind of maybe annoying or frustrating about this whole idea is that it's a little inaccessible. Like, the chart shift itself feels like it's trickery or something, right? But at the end of the day, if this crosses up, and it did, and we talked about OBV a little bit yesterday, if this crosses up and it holds, I think it's going to potentially just mark up. Like, we're not talking about just going to 8 and then crashing. We're talking about potentially marking up, like going up high and then going all the way up and starting this whole thing all over again. Genuinely. Which is, again, not something that I've largely given a huge amount of thought to. I did not feel like that was the case. You know, I've talked about repeatedly like why I didn't think that was the case, you know. I also, you know, spoke about things that I just couldn't quite put my finger on. Like, there were a lot of issues that I had with this chart that I'm looking back on it now. I'm like, yeah, probably why. Like, it's probably because of the shift value stuff. I couldn't quite put my finger on a lot of things, but there were some that just really bothered me. One of them was like, remember I was talking about how I thought this was like shifting the wrong way. Like, it didn't set up right. It's not flat. It's all like crooked with these arcs and stuff. And I was saying I didn't really have an answer for it, so I didn't want to go into it. But there was a perceived kind of element of confusion there on my part. Like, why? And then trying to identify the middles. Like, we had identified a middle early on that was really early. Like, we had identified a middle that was over here near August. And then later I was like, it doesn't really make sense as the middle. Middle looks more like it got extended out to September. Well, it does make sense in the middle if you just kind of ignore the fact that it didn't run up. You know, it didn't make that move that we thought it was going to make. And that's where, like, for me anyways, I'm like pretty irritated because I think that it was misleading. I think there's a misleading to the element of the chart. You gotta be like, well, it ain't the chart's fault if you get it wrong, Booksy. No, it's not. But even in the bottom, like, there was the same mark off the bottom. It was the same, like, hit to the gap, and then you could run up. It was the same angle as the one in 2020. Made no sense to me why that would even be remotely the same unless they were planning on using that same idea that in that setup for the 2020 move to basically set it up the same way here. It was like, there's no reason for that. You wouldn't need to do that. Why would it be exactly the same? Is it just to throw people off, you know, the trail? Maybe, but there's just weird little things like that. Like, so I had used this angle originally to try to determine where that top would be. It's 28.45 degrees. Make sure that's right. And then where the potential bottom could be later. All good stuff, you know? And at the end of the day, like, I'm never really too concerned about it. I think other people 28.45 get more concerned about it than I do when I'm not quite perfect. For me, it's like every piece of the puzzle, including the first pieces that you find, matter, you know? Like, everybody always likes it when they find the last piece, which is true, because the last piece comes with this feeling of like elation. But really, it's no more important than the first piece that you place together. You know, everyone has importance. So like when we take these into consideration, like I kind of expect there to be pieces that got left behind that become relevant later. And often I do talk about that, kind of talk about like how, well, it may not matter now, but it's probably going to matter later, right? And this is one of those moments here where I was like, how much did I talk about like change of character on this August 12th area and make a big like hoopla about it? And then when nothing happens, you're like, oh, it's Booksy just being Booksy. He's just seeing a bunch of, he's seeing he's seeing the Madonna on a piece of toast. Like, he's just crazy. Ha. He doesn't know what he's talking about. And it's like, well, why is that there? Like, the question in my mind is not, did I just happen upon some random thing and I'm ascribing too much to it? I just kind of leave it alone. And I'm like, well, eventually it probably will make sense. This could still end up being like the middle of this overall cycle that literally ends up telling us where we're going to be. And I mean, if that were the case, then what are you going to say? Like, I don't know what I'm going to say. I haven't decided yet. But how will we look at that methodology in the past? I hope that, I guess for me and my part, on this whole like AMC journey or whatever we want to call it, it's our journey. It's our journey. Yeah, our journey is so distraught. White girl Instagram. Some of you are like, hey, I'm a white girl. I have an Instagram. There was a comic that was, I didn't even watch it. I just saw like the preview, made me laugh on Netflix. I was like, yeah, that sounds about right. There's a idea here that, again, was like kind of left behind of like where that intersection was somehow significant. But I attributed more significance to the possibility of a flush here of going like up and then going back down to get the gap, Like, that's where a lot of this frustration came from, because it's like, well, was that a possibility? Maybe. We're never going to know. Would that have made sense? Maybe, but it didn't happen. What did happen was nothing. And then it ended up still doing the drop and the reaction. And now we're going to see if it still plays out the same. It's just kind of crazy to me because like I look back and I'm like, I probably, if this ends up happening and we end up going up in January and it's explosive, first of all, you guys are going to be freaking out. The 60 to 70 people that were on here today are going to be like, we knew it was going to happen, but Booksy was really late. And I'll be like, yeah, it was really late to that party. But what's frustrating, I guess, is that had we known earlier and just committed ourselves to that idea that it's going to hit that, and I did commit to it. Please, Booksy, just keep telling us how you were right. With your insecure rant. I did say that I thought that we were going to hit that eventually, that it would somehow be relevant in the future. But I had just kind of left a lot of those ideas behind as well, because there were things that just were not happening, I don't know. It would be really odd, I guess, to take off here and then to see like an idea that like, oh, we're just going to take off and like not come back. Somebody a minute ago said, do you think we're going to go to like up to the top and then eventually come back down? Well, that's entirely possible. It may seem like that's not possible, like, oh, it ain't gonna happen, but this is the second time we've tested this floor. Do I think it's definitely gonna happen? No. But again, in theory, like the original target without any kind of chart shift is like up here. That's not breaking out. It's actually going back and checking again. It's like kind of going back and checking the top. So when I look back at this, it's kind of hard for me to look at this and say like, oh, it was going to break out and go to a new all-time high. I don't think so. What that looks like to me is, again, sort of like a distributive action, or at least a potential distributive action. You'd have to look at that and consider the possibility that had it come up here, we would have been like, oh yeah, it's back at the top, yay. But a lot of people would be selling off, right? A lot of people would be like, I'm done, And frankly, at that point, you're looking at coming back down. So like we can sort of say the same thing right now. Like it's not up there anymore. Now it's up here. That's not a breakout. It's still within a channel. It's entirely possible that breakaway, even though we're calling it a breakaway, like it's never going to go back. I think you'd have to prove that you don't want to go back down through like the 10s or something again. But if we're just talking about a squeeze followed by another kind of iterative move, I mean, I hate to say it, but what I'd probably end up having to do, just like anything else, is I would probably have to look at that waveform and consider like where it might go back to on a retracement. One, but also just by nature of this chart, like I would probably expect there to be some kind of a, like right in the right spot, some kind of a pullback at some point to come back down. I get the feeling though it's gonna be talked about a lot in a markup period like we had back here. We had like 20 some odd gaps. I mean, it was a lot. So if that were to occur, it would not surprise me if we ended up back in the 5s again in the future. I don't care what anyone says about anything in terms of like a valuation. I don't think it'll matter. There's a small chance, I suppose, that it doesn't go back again, but it'd have to be like holding on to, it's going to end up being like this shelf if it does the same thing. Like this shelf would present itself on the top here, just like it did back here on the bottom. Ours would be like right here, because it'd end up being like right at the same point that you're at the top here, but then it's also going to be like basically the bottom. So it makes sense because it would end up being like a perfect kind of one-to-one in some regard. And yeah, I think if you lost that shelf, that's way off in the future. But sure, you could come back down. It's going to $1. I don't know, man. That's way off in the future. My point is that, like, maybe it changes. Maybe this time it's a shallow S-curve and it only goes down to like 4. Or it goes back down to this floor that we just made at like 399. Or it doesn't go all the way. It just goes and fills the gap at like 292. I mean, that would be a significant change of character for this stock, you know, to not go down again. Even if it looks bad, it's like, no, that's not bad. Because then you have an opportunity from a much higher vantage point, like here, to potentially just go back up. Talk about massive accumulations, you know. You would call this like a humongous potential bottom. I don't think I ever imagined it being that big, to be honest. Like, this, like in terms of scale, like taking that long down here. But I do think that it is more reasonable that we would trade in this lower channel between like 2 and 90 as opposed to way up here from 10 to 400. You know, I think this would be a way to kind of redefine a massive channel, you know, the real channel, like a more sideways action type channel. And then presumably from that point, you could take years. I'm going to guess it's going to be like 2029, which is that next. Yeah, right here, November 2029. It'd be like the attempt to get like a sideways channel going on the bottom. That makes sense to me. I don't know. Long term, it broke out of this downtrend, but then it comes back down to test it, brings you back towards the floor. And then you approach this side again, but maybe it doesn't go anywhere till 2029. Just again, as the crow flies, it makes sense. That kind of a chart to me looks right. It looks like the way you would expect it to form out. It's possible even that this is actually longer. I mean, it could even be like a little more. I have it going like really sideways, but like really far down fast than sideways. It could be more sideways than down because in theory, you've already traded a lot of this stuff before, but you didn't trade this middle for a long time, for years. So there could be a desire to maybe trade the middle a little bit longer. Just take longer time. And come way later, come back down to like 3. As it gets closer, and then they announce that they're going to push their debt off. Things are restructured. Adam Aaron's retiring. Whatever. You guys are like, it's just the same thing over and over. But it's not, like, at the same time, right? It's kind of like, yeah, at some point, it does sort of look like you're just doing the same thing. You're just laying up, laying up, laying up. But that's not really true, because eventually if this does hit, and if we're right about this, it doesn't matter if it hits next summer or if it hits in 2026. Okay, if it does hit, it's going to form another top, which means there's going to be a massive creek here, which means at some point you're going to come back to that again, and you're either going to make it or you're going to break it, right? And if you break it, you know, maybe it's like this massive bottom structure, and you get like a real spring finally, and then you end up rocketing, you know. But this time you're out of the structure, right? That's a gigantic possibility. I don't know, man. This is way off in the future. This is way off. But I'm thinking about it because I was thinking about how, like, I think a lot of folks are going to be done with AMC that were just kind of in it more casually. GME maybe as well, which lends itself quite a bit to sell-offs. Now, FOMO is a real drug, so if it does have moves that people are like, oh, it's still going, like they're going to be FOMOing in at the top here, thinking it's going to still run up past 100 or whatever. And you guys are like, but it could run up past 100. This could be a big widening, Booksy. Yeah, I mean, it could, but that's the FOMO, right? It's like the fear of missing out. It's like, oh, it's going to go all the way up to 700 or something. Yeah. I mean, I'm happy for you if it goes there and you're holding the stock, but that's just one of those things, like in the long term, I feel like you got to be careful. I looked at ELAB this morning for Jason. I'm going to quickly go through some of these. It looks okay. It kind of broke down on this channel. It didn't make that reaction right here. It went really high. So it went all the way up to the top of the gap. I think it needs to break out again. I think if it makes a double bottom at like 188 and then breaks out again, it may be in a really good place to advance. But ELAB is a tough one because there's a longer standing, I should say, pattern here of breakdowns. And so like it's had a lot of these. And pretty much what's happened every time is that either pumps up once or twice, it gets really oversold, and then it pumps up once or twice. This one did it like once. This one does it like 1.5. This is actually kind of the same thing. It's just smaller. That's the hope I have here is like I think it's a shrinking iteration. It's going less and less. But there was a split, causes some issues. So the main problem that I have with this is that historically, if it pumps up and then it drops this like 50, you can see why I'm concerned. You're looking at the comparison here. Once it lost that bottom, that floor, it dumps into oversold territory. This has happened like 3 times. So like I think the pattern traders in the market are going to be looking for that dump. So if it drops below the floor here at like 180, I hate to say this because it's kind of a really big turnaround for me, but I think it's looking at $1 because most of the time it's dropped pretty much straight down and it would use the creek cross, which is right here. Now, if it manages to advance, I would put it in a category similar to like what happened in November of 2024. The problem is that like that's not, that's obviously just a month ago. The problem is it already hit the top. So like it already hit peaked RSI. So I got a little bit of problem with ELAB now in that it didn't really make the jump here, which is what we were hoping for, that it would make that cross up. And as a result, I think you've got an issue where if it doesn't ultimately make a push again above 240, I think it's not a great buy. And I actually think that the best place to sort of confirm it would be this push above 240, and ultimately it's like a 30% move. It's a big move, 35%. I think the 240 to 330 is probably the best trade. I'd said like slightly below before, like right here, but it would have to cross up. That was risk on, and it did not cross up. So then you're looking at, well, what now? And it didn't cross up, so now you're looking at it as a floor. It needs to hold, really needs to hold this creek. I've kind of got an intersection here of like 3 little pockets. It's just, it needs to hold like this zone. And if it does not, it's unfortunately kind of anybody's guess, but it could drop pretty darn far. Like it's got a huge distance it could travel down. And it's done the same move multiple times off a very similar point. So it absolutely needs to have, like, it had that bounce too right before it dropped, that little bounce reaction, and then it drops really fast. All the way. It would be like a drop suddenly to 166. So danger, right? Danger, Jason. Danger, Jason Abrams. I don't know what PGH L is. Buckle. Oh, more penny stocks. Danger. Yeah, I think this just better to keep it simple on this. I would just use like a wedge. If it breaks the wedge, good to trade. If not, not good to trade. It looks like if it breaks the wedge, it would be right around 133. So that makes sense. It's kind of like the floor right there. So I would say if it gets above 135, it could trade it up to the gap, maybe at 2. So the trade's out here. It's not there yet to like maybe $2 if it can make that move out. If not, it's currently targeting like 80 cents and it's sitting above $1. So clearly somebody's trying to see if they can drive it low. It bounced at like $1.03 or something. So it may be that this is an attempt to kind of keep it pinned around $1 and see if they can get it below. I don't know. Obviously, you know, it's oversold or whatever, but that's not... It's not going to matter if someone's trying to bankrupt it or something, you know, or drive it to be delisted, rather. Wow. So this ended up being like nothing like what we thought. It's kind of right in the middle. It sort of made the moves without moving. It's still not jumped the creek, TANH, and it did not drop the creek either. It's just kind of holding. It's struggling both ways. So it's just pinching into this corner. So I'll say this, like nothing's really changed, but it's not even close to like what we drew because it didn't make a decision. So just kind of scoot everything over, I guess, at this point. Yeah, I would just scoot it over. There's a iterative position here that we were suggesting. It could go up to 23 cents. I don't think that ship has sailed. I don't think it's gone. I don't think it's like, oh, it's never going to go there. We had thought maybe if it jumped early, it would have like a buy up and then a back up to this ceiling. That hasn't happened. It did make what looks like a double top. That could be kind of bearish. What's the high here? 1797. 1799. So it peaked slightly above the top there. Just barely. Then it backed way up and made a new low, like locally. All right, if it jumps the creek again, it holds above 16, I would probably send it. If not, I think it looks kind of bearish, honestly. It looked like an upthrust. The RSI is tilted up. It's kind of it's just a really weird chart because it sort of made a move that looks really distributive. Like it came back down and immediately made a new low, which is weird. after trying to push, like almost like it was too early. It did sort of lay up and check this creek though. Did it go below? I'm doing my dance right now. All right, it still made a higher low from back here. So like I said, I would probably say it's ready to go if it gets above 16 cents and like holds up here. I think there's a good chance that if it does advance here, it's going to reverse. I would just be really cautious that it made a little bit of a low here, so I'd be cautious. It could still come down again to like 13 or something. I don't know. It's not that complicated. It's what makes this difficult, this kind of chart difficult, is the sideways action for so long that it's hard to see like when it ends. But there's ultimately like this is a creek, this red line. I think it's jumps that, it's going to be fine. It's going to go into an SOS at 18. And then I think it's got pretty smooth sailing. I think it will hit the intersection we thought it would at 23. It just wasn't ready to go, but it did make a higher high and come back and check that creek. I just don't like the way it did it because it came below that trend, which is weird. Usually that's a little more bearish. It's almost like an attempt that just kind of failed. So I'd give it like one more chance to get above here, and then if it does it again, I don't know, man. I think it's kind of weak at that point. It looks like it would then drop. It's like what we were talking about here. Like it has a similar feel. Like it's really similar. Like it made the advance. It's going to try again. I think if it can't get above, you could get a nasty sell-off that finally comes down to check some real low lows. And we had talked about maybe 11, 12, but it, you know, just depends on when it gets there. It may not be that bad. That wouldn't be horrible either way, because I think if it dumps down and checks the floor, at least you're going to have like maybe a double bottom, and you could go off of that pretty easily, trade off of that pretty easily. Either way, I do think that 23 is going to happen. But whether it dumps first or not, meh. Yep. CETX. Yeah, we'll check it out. I wanted to look at GME real quick, see if it looks good. Yeah, it's kind of just sitting there. It's kind of just sitting there. This is another one that looks kind of similar. It was like I was a little bit overzealous in my approach to how it might go up on this cat ear. It just doesn't ever make that strong advancement. It does advance, it tries. You can see the volume in that. It's there. It just didn't ever make an advancement. So it looks a lot more like at this point that it's failing to jump 355. There's a bit of weakness in that. I think it's going to try again, but I have to be very clear. I can see it right now. The move here, this is one that's been like delayed, which is weird. Remember this had like those big moves that we didn't get to participate in, and then eventually it did go up to 380, which we thought it would, but it did it like way later. So there's a gap down here. That's kind of scary. And then yeah, I have to be, again, as clear as I possibly can. This looks like a breakdown. So it would need to come above at this point. It's losing momentum. It needs to come back above 340s right here before it can kind of make a move back up to like 4. It's not like it couldn't happen, but it's a lot easier at this point to get to that gap fill at 293. You know, especially given the downward nature of this, it seems really it's like a big cat ear play out. When I talk about cat ears playing out, it's like the idea of waves, right? So this wave wasn't met. This is the one we thought if it accelerates, it could meet that wave. Well, this wave wasn't met. So it's not gone forever, it's just gone for now. The one that was met was farther over, and it was kind of weak, you know? I would say it's like right here. By comparison, like just weaker move, it's not as strong. And it's just kind of laying down underneath these. But there's also the underlying structure, which is like this way, this movement right here. So this is the concern with cat ears, is like they elevate it. Like the cat ear itself is always, when we talk about it, instead of like an M cross, which I usually use the way I call the downward structure, it's just an inverted cat ear, right? It's just an M shape under, you know, you mean like a W? Yeah, I mean, it could be whatever. The point is like the M is always like elevated. When it's down low, it's kind of the reverse, but the elevation is, in a bullish way, would be like, oh, we're not going to trade the bottoms very much, so we're going to keep the stock pretty high up, right? So we're going to trade like across where we had built out a liquid center, we're going to trade across the high here more and try to distribute down to get to lows. This could be a very long-winded structure. Like I've talked about this chart before as it looks big, but it's actually really small. Like this is an hourly chart, but this timing is really quick. So I find it to be a bit perplexing. It just seems like if it dumps through like 318 maybe, that's probably the middle, it's likely going to try to take a trip south to go for that gap. And it's kind of built into that. It's propped up here, right? If it dumps through, it's going to go down there. So it seems likely. So I'd just be careful. It did not make the advancement. It doesn't really look like it needs to. There's no precedent for it here. I find that it's kind of in the middle of the range. Some may say, well, it could be a V reversal, you know, where it's hitting and then it goes low and it comes up and it makes another reversal. Yeah, could be, except that I don't know. Like I said, it has to be here. Like that wouldn't happen from where we are. Like you can't look at this and say it's going to do that from 315. You'd have to look at it after it broke 340, which is the jump. It has to make the advancement in order to confirm, which is kind of a rough place to be maybe. Otherwise, for as number of these as we've seen, like there's half a dozen different ways that could turn out. But for as many of these as we've witnessed, like this, we already know in our heads because we've seen it, this could just be like a cat ear that then just comes down. So like I know that this is a possibility, but I would just be careful. And that could formulate like a whole rest of this range, you know. There could be a lot more. And even if it did come up, there's only like the targets that you'd have wouldn't be perfect. Like you'd have to kind of look at it and say, well, it can come up to the top, but then that's probably it. I don't think I would expect it to just keep going through that gap fill. I genuinely think that the reason you would do that here is to try to build out a range to trade between 4 and 3. 3 and 4 kind of. So even if it broke out, which is possible, it hasn't happened, but it's possible. Like even if it did, I'd be like, oh, well, now it just looks like an auto reaction, maybe with a phase B. And there's no telling. Then you have to deal with an even bigger breakdown and like a phase B, and you know, it could be a really long time before this kind of takes off. So just keep in mind, like I don't necessarily love the timing of it. I think right now it's got possibility if it dumps 315 again, that it's going to try to go low. if it can hold here, you might see a rebound with a move up to the 4s, but then I wouldn't consider it much of a trade after that unless you're just really into like holding on to it for science. WTO. All right, yeah, WTO really made me mad because it did like I call it a double flush. Some people don't like that because they don't like the idea of it, a flush being upward. But I see it that way because it's an attempt to drive the price up in order to drive the price back down. It's very annoying, this particular double flush, because it did not sell the RSI down more. So they basically got like a free knockdown in price without RSI, the strength really going low, which is kind of like a bummer. It's like, I don't know if it was on accident or not. I don't really care, but that is a distributive action. So my thought when it happened on the Discord was like, I wouldn't celebrate unless it holds above like 40 cents here, because you just don't know like what that is. And it ultimately proved to just be like a sell through here. And it's frustrating to me because it just reset this. It's like bizarre, right? Look at where the price is before the move and then right after. It's in the same exact spot on our side, but the price is lower now. And all they did was like pin it right back beneath this trend. And it does look like they accomplished whatever they wanted to by driving it up above the top. So it's a scary move. It's frustrating. Probably didn't get to see much of it. It happened like very last second on one of the days, and then really opened and just dumped through. And you're just kind of back to where you were before, you know? You got to get back over 30 cents here. I probably am going to have to take a deeper look at this, maybe tomorrow or something. I feel like I've redrawn the chart a couple times, but it keeps kind of pushing and then breaking and then diving back in. At the end of the day, I would use this as a measure of, you know, did it break out? And the answer is no. Like, you can see very clearly that the shorts in this did not want to let that go. So they used that as a distribution because it went back up mid-range, just like these other two pushes in November, early December. And then they sold it down lower beneath the floor. So it's just a massive up thrust followed by a sell down. Just like AMC and all that jazz. Could it turn? Sure. Like, it's just that it's set up in a way that, I mean, frankly, it just looks bad. You know, I don't know what to say. That's an ugly move. I would have to see this kind of rebound, come back above 31, and then build a support here. And then maybe it could go. Like, maybe then you could finally get that move up and get to participate in it. Sorry. It's a bummer move. This is all theoretical stuff anyways. I think one of my biggest concerns with this is that it doesn't actually come above like 50 cents, you know, and I talked about that previously. Like, there's a bit of a disconnect right now, and I'm not really sure what to make of it, but like, this looks like the wave. Like, so we were talking about earlier, you know, I respect this kind of stuff in the market. I try to like pay attention to it because I think it matters. So the wave to me is like right here. And I believe that's true, but you see how these other ones are kind of lower. It's really weird to me that anyone would do that. It's just bizarre. So it's kind of like this pocket. So I think this ends up being the level to beat, I guess, if you will. And I'm a little nervous that it gets up here and it just doesn't beat it. I think if it does, I mean, it's a big move if you buy at the bottom, You know, it's a huge move if you buy at the bottom. It's like 100%. I think if it does, you're looking at that 50-50 kind of business, but it's neither here nor there. Well, there you go. So at this point, weirdly enough, you would think that would be at 0, but weirdly enough, like, I don't know, just off the top of your head. Yeah, I mean, the percentage build out here could be right for a move back to $1. My cats are staring at me, guys. I gotta go. I'm not gonna watch the close. I'm just kind of wait it out. We'll come back tomorrow. We'll take a look at this again. Right now, I think it's partly just think this is auto reaction time, but based on everything we talked about today, we're not gonna throw that out the window. We're gonna come back and look at it tomorrow with that in mind. I think we want to see certain levels rebound and hold. And right now, getting back above 415 is a good start. Really good start. So yeah, I think that's really important. So I think that's a good place to start, and then we'll see what happens. Okay, it's looking good. Man, even MPW's got like a 2% move here. And today, coming to life finally, MPW. This may jump its RSI before it jumps its actual like creek. Looks like it's trying. Might jump the RSI trend and reverse before it goes actually above like 415. 415 is the same number as AMC. I know. I know. I know they're the same. It's really obnoxious. But they're basically the same. They got majority ownership by Vanguard and BlackRock. It's the same as AMC. I talked about it, and it's a really similar build out. It's very strange. All right, I gotta go feed my kitty cats, guys. I hope you have a good day. We'll have a better day tomorrow. I'll try to be out in the morning tomorrow, and then I might do split up the stream, do morning and afternoon or something, because I think we're gonna do the FOMC junk. So appreciate you guys tuning in, bearing with me all day. Hope you learned something or got some good information at the very least. I know it wasn't super entertaining, but try to keep the energy up going into the holidays. Here's to turning around, you know, some kind of burst here would be nice. I'll be happy if I misjudged it and it ends up reversing and going really far, you know. It's tough. We're going to have to see certain levels meet, but you never know, you know. It's one of those things where, like, every step of this is going to have to be kind of scrutinized. But if we can make the right steps, it may just be like a huge bear trap. So you guys are like, dude, it's dead. Well, that's what a lot of people were saying. And I said I think it broke through the creeks. It's not changed. Like, it did break through those creeks that we had. Like, this is still like having trouble. You can see right there, it like came right back up to it. That's basically where it is. Right there. So it's still underneath it. It's got to get back above. But grandiose, big picture, I think if it does that and makes that build out, we could be in for like a humongous January. So better late than never, I guess. All right, guys, take it easy. Talk to you tomorrow.